welcome, guys. It is still January 4th on my neck of the woods. It's my birthday today. Had a real good day. Um, just got back from some delicious dinner and dessert. And wanted to share. I had a question. I always appreciate you guys let me know what you want to learn. Um, but I had a question about what do I do if I don't have Sierra chart, but I want to be able to trade more systematically, right? And it's a good question, and I was at that stage for a while too because Sierra chart is a big commitment, right? Um, Hold on real quick. So yeah, Sierra chart is realistically $50 a month, let's say, give or take, and then plus the CME data, which depending on if you want like the full book or whatever, it's more than that. So it's a big commitment if you're already using something like TradingView, especially like if maybe you're not trading futures or maybe you're new to futures. You might not want to jump right into Sierra chart. So we're going to look over some TradingView indicators that are totally free or that you could build yourself just by combining multiple free indicators to kind of create like a super indicator. And like I said, these are all things that I've actually used. A caveat, I mean, well, I guess first of all, obviously, past performance doesn't equal future results and all that stuff, right? I mean, I can if you we got the disclaimer if you want it. Here, I'll show you. I mean, realistically, you guys realize I'm not a financial advisor, right? I'm not making recommendations for you guys to buy or sell anything. And I need you to read this and make sure you agree. If you don't, that's cool. Just turn off the stream, right? Because all it's saying really, the important parts are I'm not recommending that you actually do anything with your money, and I'm not the person to give those suggestions because I'm not licensed, right? But I'm going to share what I've been doing, and hopefully that'll be helpful for you educationally, and then you can do your own due diligence and decide what you want to do. So, yeah, this is TradingView, right? Not Sierra chart, but we're looking at this is an example of TradingView's Renko chart. Now, I'll be honest, I am not a huge fan of their Renko. I much prefer the Sierra chart. Hold on, I'm still in the long. Let me just make sure I'm okay with that. It's just runners. Seeing if I can get filled at 11:04. I got long earlier. I don't know. I'll show you. This is definitely a more powerful. Oh, you know what I can do? I'll just move my stop. Yeah. Well, I'll just do this. I will be a sucker and move my stop under 70. And that way I don't have to worry about it. And then we're going to put our I guess I could probably extend it a little bit. Let's do what's that? Here. Oh wait. It's just a couple points above the high. Hold on. Let's just real quick. Let me just take care of this, and then we'll. So this is without all the indicators. Just gives me a picture of what's happening. It looks to me like we have a range, right? This was an area I expected to get hit, and it did. Okay. The next group of stops would be here. For those who shorted here on this impulse move or on the retest, they're going to put their stops up here, right? So if we get an impulse move up, that's where it's headed, 11:40. But that's a little bit. The question is do we have that much energy? And I mean, it is coiled a bit, but I would not be surprised. What I was thinking is I'm expecting it to test up here at 11:05 or so, and then reject. And then sweep back up again. I don't know how deep that's going to go, obviously. It could just come right to 10,960, right? But it might go a lot deeper. So I don't really want to hold much lower than 10,970. And that way, if it doesn't fill me here and it does come and dip down, I'll get stopped out here, right? Which would kind of suck, but um, it's better than, I think, putting my stop down here when really it's just as likely that I could come up here and then hit my initial stop anyway. At this point, it's either going to pull back a little, pull back a lot, or run. Like there's really, I don't know how far it's going to pull back, but I don't have any reason to think that this stop would be more safe than this one. That's all I'm saying. I don't really have a good evidence for that. We do definitely have some resistance up here. And I would not be surprised also if it comes up and approaches it and actually doesn't hit it again and just makes another lower, higher low, right? That's also totally possible. Thinking, like, look what happened here, right? And then it made a higher low compared to this one. We might do that exact same thing. Little dip, bounce, bigger dip, rip. So the options would be, since I got long down here, it could be just take the win, right? And just let it do whatever it's going to do, because the chances that it just breaks out in the middle of Asia are kind of low anyway. Um, in fact, that doesn't sound like a horrible idea. Otherwise, it's move my stop to 70, risk the 10 points. Yeah, you know what? I think I'm just gonna release it, actually. I am pretty cool with that move. And this is a low volume, or no, yeah. Is it low volume node or is it a 3-bar combo? I think it's a 3-bar combo that we're getting into. But I think I'm good here.
Order
So let's just get out of it and we'll move to TradingView. So yeah, this system, the secret chart system, is more powerful, right? You're going to be able to do more with that than you ever could with TradingView. Hold on. Yeah, you're gonna be able to do that. You're gonna be able to do things much more powerfully with Sierra Chart than you could with TradingView. But the nice thing about TradingView is that at least up to like, I don't remember how many it is now, but I think it's like 3 indicators you can actually add on your chart for free, and for pretty cheap. Like rather than, Sierra Chart might be like, let's say $60 a month. I don't know exactly with everything, but let's guess $60 a month. Maybe a little less than that. You get everything, but with TradingView, I don't remember what their lower levels are. I think I pay like 2 something a year, right? So it's significantly less even to be able to have a ton. I've got like 10 indicators on here, right? So it doesn't do everything, and you still have to pay for the data and all that. But if you're not trading futures and not trading huge leverage, and maybe you're trading options like on the QQQ or the SPY, right? And you just want to be able to watch futures to give you information on that and help you make decisions. Or maybe you primarily trade equities, but you want to apply scalping techniques that might work on the futures. I don't know if that'll work, but you can try. Or if nothing else, if you already have a strategy, you might want to take a look at these and input it, overlay it onto your strategy that you're already using, and sort of see, like, do I get some confirmation here? Or is it totally random, right? Like, and I'd love to know what you think, because what I've found, I used TradingView. I've used TradingView since 2016, something like that, 16 or 17, trading crypto. And, back then it was pretty simple. You didn't need a real complex strategy. Your strategy could be don't sell, and you do just fine. So, keep in mind that's an important caveat. But and then eventually I moved on to equities, and then options, and then finally futures later on. And it wasn't until I went to futures that I realized that this basically that the candle chart, this chart was great. I really like their candle charts, and I like their upper and lower indicators and their overlays. Like, it's it's a nice look, right? I actually like the candles. They're easier for me to read than the Sierra chart candles. But their Renko charts have a lot of issues. The primary issue with their Renko charts is when the when the when the bar is live. See how it's like a different color here? It's not gonna print at the point where you'd think. It's actually only going to print after it's had like either multiple bars in a row that go that direction, or it gets a reversal. And so basically, it's potentially going to like repaint, right? And that's not the indicator. That is just TradingView's Renko charts, right? So realize that you're not going to get, even if you backtest like strategies on here, right? Like if you build a strategy here, like one of these is a strategy, this one. So this is like a really simple strategy. I don't actually use this strategy exactly, but here, if you put the trades on the chart, they'll show up and see like the little down and up. Obviously, you don't buy there, but the way this works is you want to buy if it breaks over the blue ones, and you want to sell if it breaks under the red ones, right? So this is actually not a sell. This is a sell. But I had to build it that way because it doesn't always just turn green immediately. If it goes further than that, it can be like 3 live bars in a row, and then suddenly it makes a down bar, and it'll be like 2 up, 1 down. And it's like, what? Even though, and then it'll have a big old wick like this. Like when it makes these wicks, you're gonna see it's just weird. It's hard to explain. If we watch it, you'll see it. But it'll basically just repaint or just kind of look different. It's not as intuitive as the Sierra chart version, and I don't find that I can trade with this personally. But that being said, it's still useful for reading indicators. So you're gonna to figure out what the actual price is right now, and like whether or not you are getting like where your exact trigger should be. You're probably gonna need to go back to the candle chart, right? You're gonna need to specifically see like where you are within like this candle. You're gonna need to check that first. But if you watch the indicators that we're going to add to the Renko chart, you can start to see some very useful information. And yeah, so let's just jump right into it, right? The first thing we're going to talk about real quick, I'm not going to go deep into it because I've already got a video all about it, is my Daily Voodoo. It's built by Carry Trades, my friend, who did an amazing job building this, and he's continued to upgrade it. I used to do these all manually. I had to put them all on my chart manually, and then there were a bunch of other techniques that I used with other indicators and doing math, and he was able to basically help me build this into something where I just put the input in here, and it spits out the levels, as well as what's it called? The like different pivots, and a volume profile with like bull bear dominance if you want it. Find value area high and low, right? All the things that like I used to use like 8 different indicators to build the range filter, which I have another video on. It's all built into this now, so I don't need all 8 of those indicators. I just need this one, and then as long as I update the custom average value and the gap every week, the voodoo range levels will be in the right place. But you do have to update it every week. I give you those levels on Twitter. If after, like, remember, I update the levels every weekend or so for the next week, but sometimes the market moves a lot further. Like, you can show just 10 levels, or you can show 20. But if we move like 25 levels or whatever, all you have to do is you just change this to offset it, and it's gonna shift all of the levels up, and then you won't see them here. They'll be way up here. See that? And then if we go too low, just make it -15. or whatever you want to move it to, however many levels we went. Depends how wide the range is. But now they should be way down here, see? So that way it only loads 20 levels, like the 20 or 10 nearby levels, but you can just move it around the chart wherever you want it. So, and that's just going to depend on whether or not we have a lot of range or not, right? So here, I'll show it to you like this because we don't need all the rest of the stuff. So let's see. So see how the volume profile is viewable back there? See that? Back the gray? That's kind of nice. I don't need another indicator for that, right? Now we can turn it off if we want. And then should disappear. There we go. So you don't have to have it all on, but that is just one piece that is actually free. To get that one, you're gonna look up. Actually, no. You need to do it with my link. So to do that one, to get that one, you got to go to Twitter. Go to Twitter. Click on me. And on my pinned tweet, click on this. Then it'll take you to this private invite. You're going to scroll down, and right here, it'll say add to favorite indicators. I've already done it, so it says remove, but you click add to favorite indicators. Then the next step is you're going to go here, and you're going to go favorites, and it's going to show up if you got a lot of them, search daily, and it'll show up from carry trades. And you just click it right here, not the star. Click this, and that will put it on your chart, right? So that's how you get that. It's private, but it's free currently. So take advantage of that if that's something you guys want to use. If you have the invite, it'll be free. So okay, let me turn off the trades because that's distracting, and I don't actually use them like you think. Properties, where is it? Style. Trades on check. There we go. Okay, so that's that. Now, why would you want the levels, right? We already talked about the other, like the having multiple indicators in one, but why would you want the levels? Well, I think it's pretty easy to see on, let's see here, on Renko. This is the 3-minute Renko, which basically means that every Renko bar is the distance, the distance that a typical 3-minute or average 3-minute chart, 3-minute candle takes, and that's like recalculated. So in this case, it's 7.5 points, right? So you multiply that by 4, and then that's how many ticks. So it's a little bit bigger of a tick chart than this. Like, see here, we're still in green. It's not the same. It's actually quite different. See that? It's similar to this, but still not the same. So okay. What happened to there we go. All right. So the reason you might want the voodoo range levels, even if you don't know anything about the system, right, is it's going to help you know where to look for these pivots. Now, I'm not suggesting that you just buy them hoping that it does this, because that's not usually how it works. Usually, you go through the level, right? So you don't just want to buy it because you hit the level. But what you're going to see is that once you get a test beyond a level, if they can't hold up here, the next push down is going to bring you most likely to the next level. Now, right now, the levels are really tight. And the result of that is a lot of really big impulse moves, just because of the way it works. When some weeks, they're farther away. And this will be kind of more obvious. Because right now, it's like, well, of course they go to the next level. They're only 30 points apart. And, NQ usually moves like 50 points. It's like, right, yeah, I realize that. But there are, like, when it doesn't do that is when I want you to pay attention. So the norm we should expect is that it goes from one level to the next level in the direction of the trend, right? Until it gets to the point where it can't make it past to the next level, right? So that happens here. Okay. See, is everybody following that? It's a trend, and so we're just going to expect that it continues and continues and continues, and then eventually it's going to test the level and fail to hold it. You don't know that happened until here, right? Right there. It's like, oh look, we tested above a level after an impulse move, and we didn't hold it. Don't short, please. Don't short that yet, right? But what we want to do now is we want to pay attention and say, what would we expect normally if this is balanced or at least no longer heavy momentum bullish? What we would expect next is for this 11,004.75 to be tested. It may go further than that, right? I'm not suggesting anybody trades based on that information. I'm just saying that's what usually happens. If this trend needs some rest and the momentum is like exhausted a bit, not necessarily over, but it needs some rest, right? It's going to go to this level, and then it's probably going to consolidate, and then we'll have to see where it goes next, right? What I want you to pay attention to is when that doesn't happen, right? So here's a good example of when it does. See how price tried to get under this bar, under this level, but it failed to get to the next one. And so it retakes it, and the direction is clearly bearish, right? With Renko, trend is usually pretty easy to see. I don't usually have to explain that very much. You can just see it. So right there, right, we could say we rejected lower. We were unable to make it to the next level. We don't make a trade yet, but we now expect that if it is no longer bearish, the next stop is 10,847, right? That should be the next place it should naturally go. Okay, what does it do? It gets to 10,847. Great, right? That doesn't mean the trend is done. It just means that everything's acting normal, right? What happens next is going to tell us what to do. Because if the trend is still intact, this one will be attacked again. If the trend is done, this will hold when that happens. Okay? Not necessarily exactly on the line, but it'll get defended. Let's just put it that way. Okay, it tests it. Now, we tested all the way into the midpoint. So technically we could even go a little further than that because they're so close together, it could even reach the next one. Okay? 2 is pretty normal. 3 is usually only on an impulse move. Right? If this is just consolidation, 2 is normal. 3 would be abnormal in one direction, right? So it comes down. If it's bullish, this will reject. There it is. Okay. Now, because we had this natural reaction, right? Now we can start looking for buys with our indicators. Okay? So that's really important. It's just it's going to help you figure out whether or not it's not going to give you an execution trigger, but it's going to keep you from repeatedly buying the dip, despite the fact that there's really no reason to think it's going to reverse, right? So I'm not suggesting you have to buy 10,784. You need more information than that. But this is where we would start looking at the indicators for a sign of bullish reaction. Okay, makes sense? So, next. Oh, well, whoops. Sorry, that wasn't supposed to happen. There we go. Okay. This one happens to work. And we get a nice extension up, right? So now let's look at the other one. Let's just do this one more time just to try I'm not cherry picking. Okay, what happens? Impulse move up, right? What should we expect? That impulse move continues. That's normal, right? If it does, it's just going to go higher and higher and higher, and then eventually it's going to rest, and then higher and higher and higher, right? It tries to get to this 11,067.75. It only makes it halfway, and it appears to turn around. Right? Do we short that? No. In fact, if it can't get to 11,004.75, it's actually a buy. If it does make it to 11,045.75, now we watch up here for a rejection. Okay, let's see what it does. Gets there. It goes further. Okay, that's okay. Is that normal? No, not for a bullish trend unless they save this. Oh, they're trying. Not normal, right? So this is not your typical bullish momentum. It's not like a trend day, right? If I was looking at that, that would not be an example of trend day. This is most likely some sort of a balance zone. So now what we really want is we don't want to trade in the middle of this. We want to trade on the edges. That's what that tells us. Okay. Oh, did they save it? It was pretty late. It was beyond 2, right? 1, 2, and then some. I'd say they did not save it. Okay. Oh, look! But look what they did. If you want to scalp, what you would do now, because you know it's no longer just straight up bullish, is you'd look for a 1 VR retracement, retracing 1 voodoo range level, and then if they reject it, that would be your scalp short. It's not necessarily bearish, right? We're not necessarily coming all the way down here right away. But if you're just scalping, like I do with this algo, that's how, this is where you would look for your short, right? And then it comes down. 1, 2, 3. That's pretty strong, right? Unless they bounce it here. Okay, they bounce it here. It's probably balance. Where did they bounce it to? Back to the voodoo range. Okay, does it reject? Yes. That's pretty normal, right? If you want to short there, you can. It didn't go like 3 up. So if you just want to keep on scalping, you can, right? But realize that sometimes it's going to accumulate here. And then the other thing we said was if you want to be a buyer and you see this, where do you want to be a buyer? Not there. You want to be a buyer when this holds. Right there, right? So yes, you're not going to get 10,900, right? Your entry is going to be like here after you see this. And if you were short, well, this is a much better place to cover than this, believe it or not. Because this one came after a natural retracement. And that natural retracement may mean that the momentum is slowing, right? So if you were scalping here, your target is down here, and you are out of that trade. And you are looking for bullish indicators now. Right? And then it goes higher. Okay. Impulse move, right? Impulse move, more than 2. 1, 2, 3, 4, right? Tries to make it to 5. Doesn't make it. Why it doesn't make it, we're not going to get into, right? I realize there's other reasons, right? It's not all about the voodoo range levels. I'm just showing you how I use them quickly, right? I've got a whole video on this, but this is kind of the basics. It's just telling me what state we're in and where to look to determine that. Okay, what'll it look like if it's still bullish? This will hold. Right? Is it a bullish trend or is it balance? It's probably balance. Like I thought before. It's probably some sort of a balance range. Right? Oh, yeah. 1, 2. Oh, did they hold it? Hold on. No. They did. It would have to be this one. So it's so strange having such a tight range. Usually these are like 60 points apart, so it's like, wait, what? Yeah, they did not hold it, so I would think balance. So it comes back up. Wow. So this one did extend quite a bit. Look at that. Okay, almost makes it to this voodoo range here and rejects. What would be normal? If it's bullish, it's probably going to hold around here. It's gonna recover this very quickly. It tries and it fails. See that? If you were looking for a short, this didn't make sense. This was capitulation. That did not make a lot of sense. This usually is some sort of a balance. So when you make that much of a move, a 2 VR move, usually you're in some sort of a balance phase, right? So then if the next move is huge impulse move, that's probably going to get either fully or partially retraced. Maybe not right away. I'm not saying immediately short it, right? Don't fight this. God, don't do that, right? Don't just start selling every VR level or something, please. And even if you have like a level, like I have this zone here, I wouldn't just short it, just because it's like, what's it called, irrational. But the fact that we know that's a little bit irrational means that if we do get a short that's like not too aggressive, it might be, oops, oh, did I fuck that up? It might be, nope, I'm good. A good place to look for a, like a swing short, basically. But you got to get the right setup. And so this would be an example where I would look for a swing setup on that indicators, right? So I would look here and say, do I have a sell like that, right? Okay, so, and then, because that'll probably give me a nice, at least one VR probably. So big impulse move up, 1, 2 VRs down. Normally, balance, rest, right? Some sort of a non-trending scenario usually. There we go, perfect. We come up, we can't even make it to the next one, right? And then we reject that level again. Is it bullish trend? No, it's not. Don't be just buying, expecting higher at this point, in my opinion. It doesn't mean it has to go down, but this is not normally what a bullish trend does. So yeah, yeah. And then takes out this. Also not normal, okay, to trade that far below a big impulse move. If it's trending bullish, that's not normal. The impulse move should not be immediately rejected like that, especially not on increasing volume. So if you didn't know that it wasn't bullish up here, now you do. But then let's see, is it bearish? Well, here we had less than a VR retracement, right? It didn't even make it to the next level. That's bearish. What would be the sign that it's bearish now? Well, not getting past this one, right? Because we got past this one. So if we retake this one, but hold this one, it could still be bearish. If it doesn't do that, it's definitely bearish. If it does do that, it could be balanced or bearish. It doesn't do it. Stay short. See that? Kind of cool, right? So that's how that works. Okay, I don't want to spend any more time on that, but that's the concept, right? But just realize that you have to update them. You can't just leave, these levels are only going to be good for about a week. Every week they change. And so you have to put the new voodoo range here and any of the levels here. Okay, so I could put 10.941 75, and it would just shift them down. They'll all be the same. So that I changed the level, but they're all the same because all it did is it shifted them up or down. Right? The gap is still the same in between each one. So here, before we move on, let's just take a look, and we'll evaluate the trend on this time frame. So what's going on here? Big bear wave, right? Bearish. Here, bearish. When's it not bearish? Well, on this tiny time frame, if I had no idea where I was on the chart, once I see one of these, for it to not be bearish, it's going to have to make at least that much of a retracement. And then what I'd like to see is for them to hold and not develop any volume down there. Okay, they make more than that retracement, right? No longer trending bearish. Probably balanced. Probably. Could be bullish, probably balanced. They make a 50% retrace of this entire thing, super natural, totally normal. And then look what happens. They get a 1 VR retrace, right? Totally normal. Could be balanced, could be bullish. Not necessarily continuation of the trend. Totally normal in all situations, basically. And so not a whole lot of information other than if you got a reason on a higher time frame to be bullish, stay bullish. But if you see some signs of rejection up here, that's your short. Oh, there it is. So that'd be your, now if you wanted to be short, that's where you do it, right? Or wait, what I should say, if you want to be short, that's where you look for the short signals, like these red dots, right? Which we're gonna get to in a sec. Okay, so then it does go down. Impulse move. Does not make it to this VR level, it looks like. So this is the last one they passed. If they don't make it to here, it's probably bearish. They do make it to there. So it's either, it could be, that's natural. It's not necessarily continuation bearish. And if we get a buy down here, we should probably take it. Okay, they go even higher than that. This could be an impulse move. It's probably not, but it could be. How would we know? Well, we'd probably reject right before that. Oh, they try. Look at that. One little bar. And it's like, nope, just kidding. It wouldn't have set you up anyway. But is it bullish? Nah. It's balanced. Okay, we came back to this level. Oh, shit. I grabbed the wrong thing. We came back to this voodoo range level, right? Snuck below this level, which NQ loves to do, and then bounced again. Did it make it to this? No. So this is the last voodoo range level it was. If it doesn't make it to 10,973.25, it could still be bearish. Nope, not bearish anymore, right? If we thought it was a bearish trend, it's not. It doesn't look like a bearish trend, but I'm just showing you that on any time frame you can do this work, and it works pretty good. So it got more than a 1VR. It got a 1VR retracement or more. It's not necessarily bearish, right? It's probably more like balanced. If you want it, if you think it's bullish, you really want to get your buy on the voodoo range level or lower, right? So in here. There we go. Right there on the voodoo range level. That's where, if you want to be bullish, that's your buy for the scalp, right? But you'd have to probably, you might want to put your stop down here though. And that's where we are right now. Now, you can see that we're really tight here, right? So you probably want to do this on a higher time frame, which you can do. You can, oh, I want a 30 minute, not a 3 minute. Sorry, I said 3 minute. I guess it's a 30 minute. So you could go to a higher time frame, basically making, oh, maybe not, because I think I've just got it set at 7.5. So I think it's the same. Is it just, yeah, it's just how close I am to it, see? So I could change it. How do you do that? It's been a while since I've used this. Hold on. I believe it's settings. Where is that? Here we go. Symbol, no. Right. Oh, am I covering it up? Is it in here? Settings. It's got to be in here. Oh, it is right here. It is right here. I just didn't see it. So box assignment, I like traditional because that's similar to regular. And then, so I could just change this. Remember, this is points, not ticks. So if I want to look at a bigger time frame, maybe I would pick like, let's say like a 80 tick or something like that. We like a 140, or let's just do like, yeah, that's fine. We could try it. That's gonna be pretty big. Let's do like 100, right? Like a big one. That should be. Oh, that's probably too big. How about 50? Okay. So you can technically do the same thing on a higher time frame, right? But these are so close together that it'd be really challenging. These are too close together to do it here. You'd have to do it on a tighter time frame than that. Maybe 15, something like that. There we go. So you could go a little bit bigger. That's all I'm saying. I'm not going to do it, but I like 7.5 personally. Seems to work for. That's how it's close enough that I can see it. Okay, so that's what those are for primarily. So let's go to the next one. All right. The next one I'm going to show you. We're going to start with something familiar but a little bit complex, and then I'm going to show you something probably totally new and actually quite easy. And that way it'll give you a little break to in your thinking. So the first one I'm going to show you is this one, and this is a little more complex, okay? But it's a cool idea. You can use this on candles too, but I like it on Renko personally. Okay, what this is, it's two different indicators overlaid on top of each other. That's all. The first one is an RSI. I like the RSI histo alert strategy. To find that, go here, RSI histo alert strategy by H. Potter, right? You can hit star and save it, click on it, add it to your chart, right? The settings I use for that is pretty standard. For that one, it's a 13 period, and then you don't even need these buy sell levels. You can put them wherever you want. I don't really use them, so you can even turn them off. And then histo modify, use 1.5, and then you can do this as like you can do this you can make this look a lot of different ways, right? What I'm doing with it is a histogram, but if you prefer like changing the bar color or turning this into like a line graph or whatever, you can. I think you'll see why I like the histogram better, right? So that all by itself looks like this. The RSIs it should be a pretty familiar concept for most of you, hopefully, because it's just kind of standard, and the idea is basically that it's showing how strong a trend is, but that and so the way that this hit the original way to use the RSI is with this alert strategy is basically when it gets over the red, it's alerting you that the state is probably changing to a bullish trend, right? And then as long as it holds the green level, you can buy dips like this, right? But if it gets under the green level, it's no longer bullish in general, right? Unless it breaks. Now here it touched above it. It's not always gonna be perfect, obviously, right? But like here you might get a short opportunity when it breaks back down underneath there. And then it comes all the way down. Now there is also the concept of overbought, oversold for like non-trending periods. So you do not apply this to trends, okay? You're gonna get totally blown up. But if you know that you're balanced like this, right? The way you use RSI is there's two things. First of all, you can say here. Let me use a rectangle. So you can just put lines down here and say like if it's under this level, maybe I'll start looking for signs of exhaustion or trap traders. But what I like to do is I like to look at what we're doing normally. So look, so see the low here, right? Up to the high. Okay. The midpoint of that, which is right here, right? In this case, it's all the way across. But what you can do, sometimes it's not. What you can do is you can actually draw fibs, right? And you'll find the 50%, and then you'll also find the 38.2 and the 23.6 down here, right? If you do it this way, if you do it, you can do it the other way too, I guess. In fact, in this case, I think I should have done it the other way because we're going the other way. Whoops. So in this case, we went up, right? I'm drawing up, so we're gonna draw up. I did that backwards. So from here to here. Okay. So now, what I could do is I could say this is obviously 100%, right? Which basically means the whatever that impulse move was, that deep low, like was as bearish as it got, basically, based on the math of their RSI, and that up here is like as bullish as it got, right? And so a sign that things are getting a little bit overextended in a balance situation, I do not use this for trends, would be getting to one of these fibs and rejecting it. So here, as it gets back over this one, and then this one went further than this one, and so once it gets back over this one, so it's this far, right? Here, it approached this one and then rejected. If you weren't sure if it was too close, you could wait till here Technically, it didn't here, I'll show you. It didn't, I don't think it's hard to tell. Oh, fuck, what did I do? Reset. There. Maybe it did. I guess it did. I didn't move that, right? No, it's not perfect. Oops. It's not perfect. It should be the high of that green thing. It's not actually the box. The box I was just here. Let's make it perfect. Right? That's closer. So yeah. So the idea though is that when it gets back through them, you would then start looking for a retrace, right? If it got over it. Oh, I see. When I zoomed in, it moved it. Huh. Okay, it's the higher one. Tradingview is not perfect. It's this one. So I can't tell if it traded below there or not. You could probably put the level here, and then is the level there? No. I think you can add it. Oh, yes, it is. It's on the left. So let's see what it was. Out of curiosity. 3267, and the level is, oh, that's not it. Right, because this says, that's weird, negative 800. So it's doing it on the other one. That's okay. Doesn't matter. One way or another, if it didn't cross it, it would be when it crossed back over this one, which would be here. One way or another, it's going to be this bar, though, because that's the first time it came back up, right? And then you can do the same thing on the opposite side. So look on the opposite side, right? Now, I don't know if you, yeah, if you were like, okay, I don't think this is bullish anymore, right? As soon as you figured that out, which might be here. Here, we'll do it like this. Remember we talked about, here's the spot with the voodoo range level, with the voodoo range behavior. We talked about when it's like, oh, this isn't just a bullish trend anymore, right? Once it's made a full retrace of a full voodoo range level after testing above another one, it's like, yeah, that's probably not bullish anymore. So it's probably balanced, right? So if we can get this RSI to break over one of these and then reject it or fall back through it, we could start looking for scalps. So, right, so see how it got over this one, but it didn't get to this one, and then it started to pull back. Once it gets under it, right here, oh, this one, once that prints and it's gotten under the red line, you could technically short it, right? As long as you really didn't think it was a trend. If you do this at a trend, you're going to get crushed, especially the short side. But that one works. And then here, this one, see how it gets to this, and then it gets under it, and then where does it come back through it? Not yet. Right there. So it kind of happens all at once. On this bar, it looks like this. On this bar, it looks like this. Okay, so it definitely crossed one and came back through it, right? So if this is balanced, you can probably buy that and come back up. So that's kind of neat. And then there's this one, right? Now they're not always gonna make huge moves. This one is here. When it comes back through this, which is that one, right? But stop doing it when you think it's trending. Don't do it anymore. It's not gonna work. Okay. This one's here. Right? They're not all gonna work. This one's here. Okay, and you just put the stop underneath it, right? Underneath the bar. Because you're just trading mean reversion. So did they hit that one or not? I can't tell. If you want to wait, you could wait, but then you might not have good risk reward. So here it's saying this one. You wouldn't know about that bounce yet. You'd see this. This might be our stop. See, I can't tell if it hit it or not. You really want it to do this. Test it and trap. Yeah, that one gets you. If you see, because we didn't wait for this. See that? It bounced off the red one. That's a problem. It needs, so now it clearly did not hit the purple. It would need to go under the red, which didn't happen. No, yes, it did. It happened right there. So the second one. So you'd get short here. Okay. And you make your stop back and then some. This one went under the green. Right here, came back up. Should be good. and this one went over the red, came back in, you should be good, right? So you're just playing the rotation, using the voodoo range levels to tell you whether or not it's bullish, it's definitely trending, or it's not, right? Not definitely trending. It might be trending, but it's not definitely trending, as long as you're making those 1 VR retracements. If you try this during a trending environment, like that, like if you try this, where's that spot where it made a partial retrace? Here, do we see it? Yeah, it bounces right off it. That's very normal behavior for trending. It bounces off the levels instead. Here's one. Here's one. Okay. So let's say you were down here, right? And you were like, look, it got all the way down here. I think it's balanced or whatever, right? And that's fine. But then when so you could buy this, and there's nothing wrong with that, right? But once it comes up and it does that, right? Where it gets over a voodoo range level, and then it comes back and it actually bounces off of it rather than making a full retrace to the next voodoo range level. When it does this, you do not want to sell this if it breaks the red line. Don't do it. That is fighting the momentum. So I don't know if it will or not. You wouldn't get triggered there. Oh, where did our oh, I've got to draw new fibs, that's right. So hold on. So to draw the fib, remember, we look at the impulse move, the recent impulse move, which is here. So there's our fib. Okay. It's going down. So the buy, I did that wrong. I have those extra red and green lines that I don't actually use. I could just turn them off, I guess. I probably should. They're just distracting. Let's turn them off. I want the 0 level, but that's it. There we go. Okay, so here it when it comes back up, right there, right? It breaks over the purple, and then it breaks under the purple. And so our regular strategy, if we thought this was balance, is to short that, right? Don't do that. Hold on. So yeah, if you do that, you're gonna get crushed, right? Because this is normal and healthy during a trend. This one, you got lucky and it didn't break it. And then it makes the full VR, so you would not know with this strategy that it's time to get short here, because we don't fight trends, right? But once you make that 1 VR retracement, now we know that we can start looking for balance again. Right? And now it's okay to find a short. So it breaks over this one and under it. See it? Gave it up. There you go. This makes a full retrace. So you got to be a little bit careful. It could be just balance. It might not be super bullish, but if it breaks over one of these and gives it up, you can take it and get a scalp, right? It might just be balance. Got to be ready for that. Whatever. Same thing, right? So that's one idea. Okay. Get a drink and show you how to improve this significantly. So if you think that's cool, which I think is kind of neat. Oh, one more thing. Divergence. The one RSI is not the best for divergence, but it's decent. So an example of divergence is making a higher high on price. God, annoying. Higher high on price, but a lower high on the indicator. That is your... It's not a sell signal, in my opinion. It's not good enough to sell, but it is your first alert. Right there. When you put in that high that's lower than the wherever the high was on the previous peak, it's got to be like a apex, right? Then that is a problem usually. It usually means you need to rest. It does not always mean trend reversal. So don't get too aggressive. But if you were long, that's a pretty good place to sell. So let's just see right now. Oh, well, we don't have a higher high or a lower low, so we wouldn't know. Oh, right here. Let me just get rid of this for right now. Where was it? Right here. Is this a lower low? Oh, it's like a equal low. Well, one or another. Higher low. And we'll say not a higher low. Maybe equal low, right? So at least some divergence there. That's regular, natural, bullish divergence. So that would be a sign. The RSI is not getting as bearish, even though price is getting just as bearish as before, right? And so they're not building momentum as they're pushing lower. And especially if you had a big chunk of volume at the end, but the actual wave itself, the rotation down, wasn't all that strong volume-wise. That's even more evidence, right? So that's the other thing you can use just with the RSI. I find that it's a little bit easier to see divergence with a line than a histogram, but you can certainly do it with a histogram too. Here's another really good example of divergence. See that? Now, this is important that a lot of people get wrong. They see, okay, so it's like lower low, right? Lower lows. We're clearly bearish. Here, I'm gonna take this off because I think you can see it. They see this, and they're like, oh wait, that's a higher low, right? So no divergence. So wait. Okay. They see like this or whatever, and they're like, look, higher low, lower low, it's bullish, let's buy it. Like, no, don't just run out there and buy it. Start looking for your setup, right? Well, on this one, on this example, if all we had was this indicator and the voodoo range levels, an example of a setup would be taking this, drawing it, because that's the impulse move down, right? And then saying, well, let's see if we can break this and retake it. We broke it. We retook it, right? So if it's no longer super bearish, you could do that. Now, here's the problem though. Sometimes it's going to drop again. And it's going to put in another divergence. See that? Lower low, higher low. That's not unusual, right? And just because, first of all, there's just stops in every system. And second of all, sometimes it just takes a little, especially with futures, but I see this in equities too. You get one more push of all the aggressive sellers who have been waiting to short this and just didn't get a pullback and missed this. And they're like, finally I can sell it. And then they short right into the low, but there's actually no more natural sellers left. See how it's all weak volume-wise compared to this big wave down, right? So these sellers are just like aggressive, hyper-aggressive, like retail short traders that we're chasing. There's not actually any like institutions building a position down here, or even people puking a position, really. Only a few, probably. Only the ones who bought this, like me, right there, right? If you bought this, then obviously you're losing. But yeah, other than that, there's really nobody else selling here. And that's kind of what this is showing, is there's just not a lot of momentum compared to the previous time it went down. So this, but here's the problem. This divergence is actually not as strong as this the one we saw before. This one. See how these are like really big waves? Right? And there's, yeah, like they're like the primary waves in the trend. That is better than these like micro composite waves. And the reason, if you're curious, if you use divergence and you notice that and you wonder why, the reason, in my opinion, technically anyway, is that by the time you get so far up here, in order for price to go much higher, you're going to need a lot of energy. Because look at how much energy it usually takes to get, like, look at these moves, right? That's what it takes to push RSI that high. See, like, even this only pushes it to here now. And look at how close we are to there. See that? It took a lot of energy just to get it here, right? So if you think about it, where was that? Right here, right? So we're already getting closer to the midpoint here, and the potential for now having a divergence in the opposite direction is higher. So in other words, it's called hidden divergence, right? So during a trend, this only works during a trend. Okay, do not apply this to balance trading. But in a trend, if you get a, let me find a clean trend here, and I'm sure we'll find one. If you get, here we go. Okay. None there. So what I'm looking for is a clear higher high and higher low, or lower high and lower low on price like this, right? Strong, decent trend. And then what we're going to look for, here I got one, is a situation where the indicator makes a lower low, but price made a higher low, right? During trends, these are quite strong. And what it basically says is that the sellers are working really hard, but they're not barely making enough progress as they used to, right? They used to work this hard, and they were here. Well, now they're working just as hard, if not harder, because it came from up here, and they're only getting here. What does that mean? They're probably going to fail, right? So the problem with that is that you can't use that against the trend. Do not use that counter trend. That's not a sign of a sell trend ending. It's the sign of a uptrend continuing. Okay? It's only useful in the trend, in the direction of the trend. Whereas the natural divergence, where price goes higher, but the indicator goes lower, that's the sign of trend, like exhaustion. Not necessarily end of the trend, but maybe need some rest, right? That move, that big divergence, is going to be way better than, say, if you had divergence right here. Like if you got a higher, let me think. Do I have one here? Lower low, higher. No. Well, maybe. You could say that this was bearish divergence because this went lower and this didn't, right? But it's like we're not. You have to ask yourself whether or not you think you want to be selling here, basically, and then you look at the waves themselves, and you can say, like, how significant is that divergence? Well, look at the rest of the waves behind you, right? Are the waves that you're looking at like bigger or similar in size to these, or are these like a little tiny micro composite of the big picture? Because if you're looking at a tiny little micro composite, your divergence don't mean really shit, honestly. That's the truth. So when you're looking at, where was that? I lost it. I think it was over here. Where were we? Here? We had a little divergence to the downside. Here we go. Okay. So you'd expect this one to be pretty good. And then when it continues higher, that is bullish right here. That's bullish, but they're smaller, right? I mean, I guess it's one like big wave, so maybe it's not so bad as those tiny like these little waves being divergent. That's not really that important. But when these significant waves are, it can be, right? These two are medium maybe sized, right? Compared to the recent ones. It'll probably work, but it might not be a trend reversal, right? So we do get a little something, but then look what happens. We make a higher high on the indicator on RSI, but we make, oh, maybe we do make a higher high here. I thought that was an equal high, but maybe not. Lower. So no divergence yet. So I guess let's see what happens. Another bullish divergence. See that? This one goes down on price, or maybe it stays the same. I think it goes down, and this one clearly goes up. Okay, bullish. I mean, it's worth trying, right? We make a higher high on the indicator and a higher high on price. This is bullish, but look where the indicator is, right? It's above the midpoint, and now you have to ask yourself, in this case, we're good. But if we weren't at support here, I would say be very careful. Like, okay, like up here. See how it goes bullish here, right here, right? If this was a big, if we had some bigger selling, and you were, and let's say we had that same divergence here. We don't have it. We just kind of have to pretend, right? But let's imagine we had pretend divergence here, and then you got a little bit up above the zero line. Some people will say like, oh, that's bullish. It is if you think this is support. So maybe old resistance is new support. And if that's how you read it, cool, right? Then yeah, go for it. If it had divergence, it would probably work. But the way I look at this is we're actually at a resistance, and it could be like a head and shoulders, right? And so you end up getting this. Before you can continue. But to be fair, that did become support. So maybe I'm wrong about that. But one way or another, that's usually a good thing to think about. Like here's another one, right? Like we get up into the upper edge. If this would have been divergence, if we would have had a lower low on price, but a higher low on the indicator like this, and then we got over it, I would normally be a little bit cautious here because of this resistance, right? And so this one does get to that resistance. And I guess that is, how much space is that? Is that 100 points? Maybe I'm just too zoomed in. Because if that's 100 points, then that's fine. The problem, I'm so used to looking at this chart with every tick, every bar only being a few ticks away, that I guess, to be honest, it's probably okay. So I take that back. It since it's so large, it's probably fine. Oh, hold on. I lost my... where did the Sierra chart go? Disappeared. There it is. Okay. Oh, but I don't want it there. Sorry, guys. Hold on. Thank you. Okay. Okay. So... yeah. So that's every way I use that RSI. Okay. It's not by itself. I'll be honest. It's not a ultra powerful tool. Okay. But it does have some uses. Now, I know that took a little bit longer than I wanted it to, but we got some good information, and it's gonna apply in the next indicator too. So let that all sink in, and now I want to show you something else pretty cool. So there is a indicator called the OBV, right? And we're gonna look at something that's just a slightly different than the OBV, which is on balance volume. This one is the OVB E by K, okay, and it's by Kivank Osbil. I'm not even going to try that, but this guy, right? Just to give you a little bit of information, it's a modified version of the OBV, and it can be used to identify divergences, right? And that's primarily what it's for, all right? And so, like I said, we just talked about how to find a divergence. So now that you know that, and it works on the RSI too, but it works really well on this other one. Okay, this special OBV. It's not exactly an OBV. It's not going to look the same. It's slightly tweaked. Oh, my settings are inputs. For the first moving average length, I just use a 1. Second, I use a 3. So it does not change much. It's not smooth very much. It's showing us most of the input. So you can use it all by itself if you want, in the same exact way, basically, that we were just using the RSI. It actually works very similarly. Okay, and you can practice it. It's obviously not going to get the same all the same information. Like the inputs won't always be the same, but the techniques are the same. So like if you do that, and then you get into an area where you think it's balance, which you'd know because you're making a full retrace, right? Now I could start looking for spots where we recover one of these lines, like here, which is here for the scalp, and then here, which is here for the scalp. Okay. And then on the other side, you'd wait until they take it, and then they give it back, which is here for the scalp. A little late, but it's cool. And then here would be here for the scalp, right? So same idea, still works. And then in addition, the big waves, again, don't worry so much about these guys. These ones aren't that important. But for these big guys, bigger waves, the dominant ones, we can look and find situations where we have divergence. So here's one right here. Higher high on the indicator and lower high on price. So if you weren't sure that this isn't bullish, when you see that, it's pretty hard to sustain a strong trend when that's going on, right? Without some sort of rest or consolidation or something. And then on the other side, we can find one. Let's look at we looked at this one before, right? This was the one with where the RSI had the two divergences in a row. So here, let's see. This one is not much divergence there. See that? It's pretty much even, right? You maybe a little bit, but not as much. And that one doesn't go anywhere. Now this I would not really count as divergence because that doesn't look like a peak to me. See that? It is technically higher than this, but what I really want to see is like a dip, like this, like a spike is what I really want. So I'd probably skip that one. Okay, that's a little better. See how it's actually got some form to it? Right? You could picture like a double head and shoulders or something, right? It's got like, I don't know how to describe it. It rounded is fine. It needs a deep enough cut before it so that it actually like jumps out a little bit. I guess this one's okay, but that's usually as weak as I want it to look. I'd prefer them to have like this is good. Big, see that? Like you would know that that's peaking right there. See how like obvious that is to your eyes, that clearly we're making a lower high on the indicator, but yet we're making higher highs on price. Like that one looks good to me, right? It doesn't necessarily work, but I'm just saying that's what I want. That's what I want to see. And then let's see, high. Now it's a bullish trend, right? So don't fight the trend. Don't just take every short because, oh, this little tiny little bounce. See how like weak that is? It's like just a little like, yeah, there's not much to it, right? I don't really know how to describe that. But if you're looking at it like this, like that's not much of a high to me. It's not really much of anything. But if you did take it and you thought, oh, it's got lower highs on the indicator and higher highs on price, then and it's going to stop you, then you got to ask yourself like, wait, was this a trend? And it is, you know, it is. It's holding strong, and it can't even pull back a full voodoo range level. Look at the pullback. It starts at this one and it doesn't get to here, right? This is where divergence stops working. And if you don't have the voodoo range levels, or you can't, like, you don't have some way to tell you where it's trending, you're gonna make a lot of mistakes trading divergence. Okay, so now we're gonna put them together. Watch this. This is pretty cool. This is what I wanted to show you. So we're gonna overlay. I've got them both as histograms, so they're easy to see. We're gonna overlay them. Okay, they're slightly different colors, right? Remember, the RSI is the green and the purple. Green and purple. And then the OBV, like moving average one, is the white with the pink line, and then the white with the blue line, right? So the way I look at this is, if you look at a big picture, right, I want you to look for spots where we have one of the indicators much more severely affected than the other one, versus areas where they are moving in relative synchrony, right? So we already know how to interpret like whether or not it's bullish or bearish, right? We talked about that for like an hour, right? This is becoming a little bit deeper than I wanted to go in it, but I think it's going to be helpful. So now what I'm going to do is this is going to give you a way to basically quickly look at a chart and know almost immediately what, as long as you've done the work to know if it's bullish or bearish with those other setups, it's going to tell you almost immediately whether or not you should filter that trade out or if you should keep it. Okay. Now it's not going. I'm not saying it's going to filter out 100% of the stops, but it's going to help quite a bit. Okay. For instance, take a look. Oh, I forgot. If I zoom in, it moves this. That's annoying. I want it to be. So we need the zero lines to line up. See how the two zero lines are here? We need them to be relatively close together. Okay. So this is not right. See how it's not lined up? This is okay. That's pretty close. Right? So I want you to look at what happens when we have both indicators under the zero line and they're dropping in relative synchrony. What would you say that's called? Right there. Again, the zero lines have to be kind of lined up, so I keep missing it. It's like somewhere in there. But you see how these are dropping together? Right? It doesn't have to be in the exact same bar. Like this one dropped first, but they're both dropping at the same time, right? And at least one of them is underneath. That happens here. Here. Right? So here, I'll move to it. Man, that's annoying. Come back. Where is the midpoint? It does not like being zoomed in. It's fine when it's far away. I'm not totally sure how to fix that. Is it because I have this? So, that's what it is. So you have to fix it on the right side. Interesting. Okay, I got it. Okay, so if you look here, I first want you to look down here. Watch what happens when the OBV, the pink with the white, it rejects the midpoint, right? And it gets underneath the midpoint, right here, right on this red bar where the vertical line is right now, the dashed vertical line. It was up above, it rejects it, and it's now going underneath the 50% line. And then if we look at the RSI is also dropping from the previous, at least one bar. It's dropping, right? That means that they're moving in synchrony, right? They're in sync. Not the band, but they're moving together. If you even if you move the zero lines off, if you can keep track of where they are, you can still see it, right? They're moving in generally the same like pitch, right? They're falling together. That is an example of a strong impulse move. That's what happens when you get strong impulse moves, okay? And it should be, one of them needs to be under the zero line, preferably this way, the OBV. If you're looking for a short, man, I keep on missing it, right? In between there. The OBV should be under the zero line. There we go. And the RSI should be dropping in about the same, at about the same pitch, right? The confirmation when they both fall under is here. When it breaks this little mini support, right? You get confirmation because now they're both under the zero line. Do not buy when you see this, like ever. Okay. Then if we continue on, how long does that continue? Notice here, the OBV lets up a little bit, but RSI does not. But we are clearly, we already said, we are dropping in sync, right? This is not a buy. In fact, if anything, that's a short opportunity because the RSI is still heavily dropping and the OBV is just taking a little break. So if anything, it's probably consolidation and it's an opportunity to sell again. Okay, and we'll see that again in a minute, right there. So I don't remember where that happens on the chart, right there. So if I saw this, it's not that, oh, I see they're not lined up. They're not lined up. There we go. If I saw, wow. So see how it starts here? If there's a pullback there on a smaller time frame, because remember this is like a 7.5 point bar, you might be able to get a scalp there, and you might be able to get a scalp here, okay? But look what happens here. It comes down, and they touch. See that? They touch right there. And then when they come back up, now they're both rising, right? We generally don't want to short yet, generally. If they're doing this, if they've been dropping, and then they meet and they bounce, this could be the low, okay? Not just one of them rested, but both of them severely bounced like that. That could be the low. So you probably want to exit your short if you saw that. I wouldn't buy it yet, but that would be, unless I had another reason, but that would be an example of where you might exit your short. But look at what happened. I think they pull back, and look at what happens when they pull back. So take a look. So see how they come, the RSI is actually leading the OBV, and then it comes back. If we would have gotten it just a little bit deeper than that, or wait, hold on, am I mixing that up? No, yeah, if we would have gotten just a little bit deeper than that, it might have been a good scalp to the long side. But this, I don't quite see it because they're just together. So it's, and we're not in a bullish trend. So it's hold off right now, for me. Just wait, right? Now look what happens. OBV, or no, I'm sorry, RSI comes up towards the zero line and rejects, right? While OBV covers it. See how it's like covered up here? You don't see RSI on the bottom like you did here when the trend was strong. Because when the trend was strong, they were either going together, right? Right at first, the OBV was heavy, right? But once they were going for a while, RSI crossed OBV, and there's no reason to fight here, right? I said, if anything, you could just continue to sell it until you get this, where it's like, okay, now they're resting, right? But if you look at the difference between, see this one looks more like this one, right? The OBV is lower than the RSI, yeah? And if they were both falling together at the same pitch, it's probably time to short. But it's definitely not time to buy. Because what we need is the opposite on this side of the bar. So now, okay, so yeah, see, it just sells some more. So now, because they never, see how they never really went up together while the RSI was like showing, right? It was all, the OBV was always covering it up. Hopefully that makes sense. Like the pink line is lower, and so RSI is like moving too fast. Basically, it's rising too fast to sustain it, and there's not enough volume to sustain that move, is what that's saying. And so once RSI gets too high here, it gets beyond it, and then they peak. That's, if anything, that's your short. Just like it was here when RSI got too high here, right? And OBV peaked above the 50% level, and then they rejected the zero line, whatever, and then they rejected together. That exact same thing happened right here. Here, let me show you. RSI got a little bit too high, basically hit the zero line, close enough, and then they both started dropping together with OBV lower, which is great. See that? That's usually the start of a move. Down. Okay, so see how OBV continues to be strong all the way through here, right? Did they need to use a lot of volume for this move? No, much less than this. See how much pressure we had here? So if you want to short up here, you can. Here. If you want to take that breakout, that's the breakout to sell, because you haven't actually committed a lot of volume here, and yet the RSI is deep. Right? Now the problem is that's going to create most likely a divergent low. But we should know here that we don't want to buy the divergent low when it comes. Here, I'll show you what it looks like. If I remember correctly, we have one. Oh, am I wrong? Never mind. No divergent low. When we get there, if we would have gotten one on the RSI, if this would have bounced right here, and we had a higher low here, get back at zero. If we would have had a higher low right here, let's say, on the indicator, but a lower low on price, we really wouldn't want to buy that, because here RSI is actually deeper, just like this. It's too deep. See that? It's powerful. You don't want to fight it when RSI is doing this, right? And they haven't had to use a lot of volume. Now right here they had capitulation volume. See how it just like flushed with volume, and they met at that low? That might be a good place for a capitulation buy for like a scalp, right? But you need it to look just like that to pull off something like that, or you have to see RSI come back and tag the OBV like this. If you're going to trade counter trend, that's kind of how you do it. You look for these little bounces off of each other, right? But when you see this big difference between the two, where like one is way down here and the other one's like lagging it or resting, but they're both clearly bearish and below the zero line, that is not a good time to buy. So no buying dips there. Okay, what happened here on this low? Take a look. This is a perfect example. So see how the RSI made a higher low, but price made it a lower high, right? That's divergence on the RSI. If I just turn on RSI, that's divergence, right? When I put the OBV E by X on it, all of a sudden I realize that we got a ton of volume coming in there. You can see it up here too. Got a ton of volume coming in. See how this pitch just like went exponential? And rather than meeting at the bottom like this, which might give you a scalp opportunity, instead the volume actually went way deeper than the RSI did, right? And that's what created the divergence. Generally, this is a dangerous place to buy if that happens. Generally. I don't remember if this one worked. Yeah, it does not. That's not surprising to me, because volume is continuing to build right? Even though RSI is resting, basically. So if anything, you want to short the next little, whatever you want to call this, where they're separate. See how there's like a hole right there between the two? And there's a hole right here between the two? Those are your shorts, visually. And you don't have to really understand it all, but if you can see like the black areas or the gray areas, and when they both start to drop together is the stop, is the short. So here is the gray area, right? They both start dropping together right here. See how they both dropped after a big gray peak? Like there's like a mountain peak, and then you're under the zero line, both of them, right? Or at least the OBV is. If anything, the RSI might have peaked above it, but then rejected. It's got to be under the zero line here, and they're both dropping. That's probably bearish trend, right? Well, this is the same thing. They're both dropping. OBV is lower than RSI, right? And it's clearly below the zero line. That's usually just continuation of the trend. Now, it could exhaust, right? And when it does, I'll show you what it's going to look like. Okay, that's another short. See that? Still below the zero line. And they both dropped there. So that's another short based on this system. See that? Now, look what happens. See how they meet right here? Just like they did here. They align. Hopefully you can see that. There's no more black. Right? See how this one they dropped and there was black down here? Right? That means don't buy. The gray, or I guess it's not black, it's gray. The gray is like don't buy. If it's above the pink line and they're both dropping for a bar, it's probably a sell. Otherwise, you can technically sell as long as the OBV isn't oversold, right? So don't sell down here. But if you want to sell in the purple, it's probably okay. Like sell here, probably fine. Here, probably fine. Here, don't sell anymore. There's no purple, no gray, don't sell, right? Here, this is for a trend. Here, whoops, I've got this covered now. Purple, it's fine to sell. Here, you're gray, but it's really far from the zero line, so it's a little bit dangerous, right? And it works. And then here, you're not really dropping, but you might be able to catch something here. This one, when they start to drop, that's an okay sell, right? But again, this now you have divergence right here. And they've met. See how they're meeting? And they're both rising together at the same pitch. Remember what we said about what that happened? What happens there if they're anywhere, especially when they're near the zero line, and they're dropping with the same pitch? Well, it's the exact same thing for when they're rising with generally the same pitch through the zero line. This one's perfect, and it happens to be divergent too. That's a much better buy. See that? And I'm not cherry picking. This is how it works all the time, right? It's just important that you understand the divergence and understanding how to read it and stuff like that, because it's the same as the RSI that I just showed you. But here's another one. So look. So bullish, right? We're no longer underneath the zero line. Here, let me line up the zeros. They're both rising above the zero line together, right? Bullish. So we can do the whole thing we just did in the opposite, right? So just like here where we saw the gray underneath, gray up here, it's still safe to buy. It's not too late. Not too late. What do we see here? It's not too late to buy dips, is what that means. See how it's gray up here, right? When you get this dip in the RSI, but the OBV is nice and healthy up here, that is your dip buy. As long as you had this rising period here where they were together. It needs to rise together or fall together, right? Usually the short side, OBV leads a little bit because they tend to like push a lot of volume at those breakdowns. Like there's lots of like aggression. So sometimes they're not perfectly aligned, but they should be dropping together, right? On the upside, they almost always align like this. They like tag each other, right? See how here they're totally separate? The RSI is only here. right? But the OBV is way up here. There's that big space in between there. What that means is that whatever the trend is can continue. It's not an automatic buy, right? Because it is above the zero line, so you might be if you do buy, you'd have to put your stop below support. So you want to get a good entry still, but it's not time to short as long as there's this grayish white area that's visible here, because I guess it's not white, it's gray. It's like it's balanced to bullish. Okay. Okay, so then we continue to rise together. That's bullish. See that? Bullish, bullish, bullish. Now, here's where things change. What happens right there? They came to a peak where both the RSI and the OBV tagged each other, more or less. They were right next to each other, right? The zero line isn't perfectly lined up here, but it's close. If anything, green was above, right? This is now a little bit too low. I'm having a hard time getting the zero lines. Oh yeah, I think I did it here. Is that how I fixed it? God, how did I get that to line up? There. So if anything, green went above blue, right? And so you start to see this green peeking out, and then they both drop, just like they did here, where green showed up, and they both dropped, with OBV dropping below the zero line, right? Same exact signal here, right? Heavy selling all of a sudden, right? They either met, or you see green, and they drop right there. Same thing, right? Be cautious with buying dips now, because it's probably bearish, right? It doesn't have to be, but it probably is. This is usually not the dip I would buy. Now, interestingly, what happens here is green holds at the zero line, but OBV goes way under, right? They're no longer aligned. So if it's a bullish trend, you could technically, and you're making higher lows on price, you could technically buy that then, because they're not aligned. It's either one, right? Once it's trending, I don't want to be confusing. Once it's trending, let's just make a general statement. When we're trending, when they're not aligned, right? When you got the OBV up here and the RSI down here, or the OBV down here and the RSI up here, either of those cases, we should assume trend is continuing. The only time we're fighting a trend, or even considering looking for a trend to slow down, is when they align. This is the most important thing. Okay? Don't fight the trend until they align. Like here, they're not, see how they're not aligned here? You don't buy that, right? Now they are aligned, and you could try to buy it, right? Now they're aligned, and you could try to buy it. But here they're not. There's that space in between them, and so you don't want to fight the trend, right? Whereas here now the trend is bullish, and we already talked about how to figure that out. And so now you just don't fight the trend, because the RSI is nice and healthy, and the OBV is giving you a dip, right? So this looked like a sell here, and that's okay. You're not going to get everything exactly right every time. This looked like a sell here, but RSI never fell below the zero line. I thought it did, but it doesn't. It did not go below the zero line. See that? Here it did, but not with OBV. Here, OBV goes under and RSI stays up. That's not a sell. Or at least don't fight the trend. If it's trending up, don't fight the trend. So see, all of this is buyable, is what that means. Because RSI is healthy. RSI is healthy. So that's buyable. Right? Higher lows, higher lows. Continue. Now, look what happens here. They both go up. What happens now? They both drop together, right? They weren't aligned at the time. So you'd have to have reason to believe that there's exhaustion up there. But look how weak OBV was. So that is divergence on OBV, right? And now they are both dropping together. So if they both go under the zero line, you have confirmation that the trend needs rest, and it's probably a sell. But you probably want to do it on a retest because you're not going to be able to have very good risk reward. So let's see what happens. OBV gets under zero line, RSI bounces. Nothing to do yet. Okay. They both briefly go under the zero line. Okay, indicating it's probably not bullish anymore, right? And so, but look at how far away we are from resistance. So now I really would want a retest, right? And what I want to see is either OBV or RSI or both staying under the zero line, or at least making a divergence, but preferably staying under the zero line. Okay, OBV, see the red, stayed under the zero line. They're not lined up exactly again, but hopefully you can see it stayed red here, right? And this is green after visiting underneath. See here it stayed green the whole time. That's still bullish, even though OBV was deep, right? They're not aligned at all. They started to drop together here. Let me get that lined up as best I can. There we go. They started to drop together right here, right? But they weren't lined up yet, so it's probably consolidation. Here, they tagged right there, right? That's the confirmation that the trend is probably done, but we wanted to retrace. The OBV stays under zero line. That's probably bearish. Our RSI tries to save it, and it might even have made a divergent high here, but they're little waves, not that important. But if I had a sell signal there and I thought I was bearish on the higher time frame, I'd probably take it. And I might have gotten stopped. See how they got both of them underneath? And then RSI just jumps, and that's it came back up. Oh, it didn't cross support yet. Oh, look, our OBV still can't get above the zero line. Now they drop together. That's a sell too. Still can't get above the zero line. It's still all bear. Here, they both drop below the zero line. Confirmed sell. So if you don't want to mess with this, right, wait for this. Where they both drop down together. That's your best case scenario. And now we look, it comes back up to zero, and it rejects together. And look what happened. Once again, just like over here, right? We have both of them dropping together, and we've got RSI deeper than OBV. What does that mean? You can probably sell and add to your sell right there. Right, so this area, if you shorted this, you can add to it here when you see that purple. And I think that's pretty powerful, you guys. How long do you want to short? Well, you can short as long as they have not gone down and tagged. Uh-oh. There's the tag. See it? Tag. Problem if you're short to see that tag. Now it could exhaust, right? We've got momentum and a ton of volume, but not at the place where we want the volume. We've got it all at the lows. So now if they save this, look at how it goes together. It rises together. Buy it. Like literally reverse. See that? Okay. Any questions about this? I think it's really neat. Like I said, I've used it more for things that are more for stuff other than futures, just because it can take a bit of range to really confirm. But if you're trading options, for instance, you might want to check it out. But don't use it exclusively. Like, keep in mind that you should still use your own, whatever you've got back tested and you've got a strategy that should get you into trades. I'm not telling you when to trade, but I'm saying maybe you should take what you're already doing and look at this one. Okay, so let me get this lined up and let's just look at what it's doing right now. And then we're going to come back to it so I'm just not cherry picking here. Now, obviously, it doesn't always work. So I want these to be relatively aligned. That's the first step. I'll do this one more time. Last time I had to like adjust something. No. Here, let me try resetting it. Reset. Okay. Doesn't make a difference. Oh, do I have to reset this one too? They keep jumping back and forth. There we go. Okay, so what do we see here? Right? Well, when we were coming up here, I don't really want to go any further back because it might unmatch these, and right now it's matched pretty perfectly. So let's just take this tiny little bit, and we don't know. Well, we won't even measure anything else. We can say up here they tagged. See the tag? If you were buying, if you're a buyer, you should have sold there, right? Or at least looked for a sell earlier today. At like, I think this is, yeah, before the close or just after the close. Then, but what happens? OBV gets under the zero line without RSI getting under the zero line. What does that mean? You're probably consolidating, right? They're no longer moving in sync. And so you're going to get some consolidation. They're probably going to steal a stop, etc. But this bearishness of this tag still stays there. And then you get divergence on both of the indicators, right? Green goes lower, blue and white goes lower, but price goes higher, right? Confirming this previous point, okay? So right when they start going down, which is this bar, note that they're going down relatively together at this point. The pitches, they're not exactly aligned, but the pitches are similar, right? It's not like one is dropping exponentially and one is dropping linearly at a 45-degree angle. They're relatively 45 degrees on that first drop, right? In addition to this one. They're pretty close. So that's probably going to be a decent move. Could even be an impulse move, right? But what we notice down here is that we don't see any purple underneath here. We just see gray. And those breakdowns usually don't create another extension. The ones that do are the ones that have the RSI deeper than OBV, because while we do want some volume at the breakdown, this zero line breakdown is not usually the actual structural breakdown point. This is it might be on a very small time frame, right? But you don't want to have OBV so low unless you've got RSI really cooking. Otherwise, you're risking exhausting your volume. Okay, so generally, it's not that it's bad for this immediate move, but it usually means you're in some form of consolidation and not necessarily some big impulse move of a trend. So you can probably still look for traps down here and stuff like that. Well, in this case, they came down and they tagged. So right away, I know that if I get an indicator that tells me to buy here, I probably should, and I did. So I bought this one, and then I sold it. I think I said 84 is when I got rid of it. But you can see here they rose relatively in sync, both getting above the zero line right here. And that generally confirms that for the moment it looks bullish, right? Now it could be bullish to neutral, it doesn't have to be a trend, but it's probably bullish. It's just that you might not want to buy way up here because you'd have to put your stop again under support. So what happens? Well, RSI has to push pretty hard and price doesn't get very high, right? And as a result, you get a pullback. Well, that pullback did not start with a tag. See how far apart they are? But they do fall together, and they fall together through the midpoint. So you've got some mixed information there, right? No tag, but fell through the middle, just like this one. Where it falls through the zero line, but it didn't necessarily tag right at the top, right? So in that case, you don't want to be a buyer until you get a tag, preferably. Now, we already technically had a tag, so if they hold this low, that's also good enough. Or maybe if they test below it just a little bit, but like protect it, basically defend the low, we're good because we had a tag. Otherwise, if we get a tag here on the bounce, and then both of them bounce together, then that might be the start of a new impulse move. So in general, what we would be looking for is both of them being together at the bottom. In other words, no gray showing, like this, where there's no gray showing in between the RSI and the OBV. There's this gray has disappeared. See how it got thinner, 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 and it's pretty much gone now, if not totally gone on the way down. And then they both bounce at the same time together. It's not like it stays purple down here, right? It's black down here, and now they're both rising relatively together. Doesn't have to be exact, but relatively together. And then they both have to make it over the zero line, and they both have to not tag on the top. Now, dips have the potential to be bought, right? But preferably I want to see a tag if I want to be sure. So once this closes bullish, assuming it will, we'll see if we got a tag here. Now we're not going to know. See, we don't get any information down here for this indicator until this bar closes. There's no early warning system like there is on Sierra, where on Sierra, I have like this triangle telling me that if this bar closes bullish, it's going to give me that triangle. TradingView doesn't do anything like that. And in fact, sometimes it doesn't even print the bar. If it's going too fast, it won't even print the bar until it does like 2 or 3 bars in a row. So you may not get notified right away, which is pretty frustrating. But it's yeah, if it's not moving super volatilely fast, like super volatile and fast, you'll probably catch it. That's all I can say. I wish it was better, right? But considering the price, it's not too bad. So okay. So yeah, if we don't see the tag here, right? If we don't get them to move together, or we don't see the tag. So in other words, if the low looks like this would be a good sign where they tag. If the low looks like this one, oh, yeah, where one or this one, where one of them is clearly way lower than the other one, like this low here. If that's what it looks like, then I'm going to assume that we're still in some sort of a consolidation, right? So let's just back up and just real quick, just find some other ones. So here's a tag and a run, right? Obviously, it's not going to catch every move, but the general rule is going to be the same. They're not aligned. Go with the trend. Trend is bullish. Okay, it's pretty easy. Tag, right? You get the move. That's a pretty good move, right? It does not mean it's going to continue after that, but it does give you this, right? Now what happens? They come all the way down. No tag, right? Don't fight the trend. What's the trend? Bearish at that point. Now this is pretty close to a tag. I might call that a tag if it's not perfectly aligned, but it's damn close to a tag there. But this is clearly a tag, right? So this one's good to go. This is a tag right there. Okay, I'm not immediately shorting it. But once those are both under the zero line, like down here, short, or at least be bearish. Whoops, it moved it again. There's a tag right there. See that? Oh, they're both maxed out basically. So this probably going lower. Confirm bearish down here, right? Look for your entry back up here. Which we talked about. Here's a tag that doesn't get into the zero line. Oh wait, is that just not aligned? But that does happen. Sometimes you get a tag and then they never give it up because the trend's just too strong. Let's say it is, right? Let's say that's a tag. I don't know if it actually is when they line up, but let's say it is. You need it to go below the zero line before that's really meaningful. They need to drop together and they need to both drop under the zero line. It does not. This is the irrational exuberance move, right? What is it called? Like the squeeze. right? That's the squeeze. You don't short that, but now you can short it. And especially now you can short it right there. Under 11,100. Okay, tag, right? Good to go. Yep. Up here, well, this was definitely tagged. So the tag down here is different than this one. This is a really good example. So see how this has gray underneath? There's space in between the RSI and the OBV. Not a tag, right? Not bullish yet. Not done. They come up, they tag. It might be bearish. They both have to get under the zero line. RSI doesn't. Wait. Comes back up. Look how OBV can't hold above the zero line after getting under it. It's like, no. Once they both get under zero, right there. Short. Purple is lower than pink, right? So RSI is heavy and OBV doesn't have to work very hard. Don't buy. They didn't tag. Comes back up. Can't get over the zero line. Probably still short. Comes down, tags right there. That is where you get out your short. And now you're looking for long here, right? Comes up. Now look, you could say like, oh, that looks like a tag. Yeah, but they didn't drop together on the very next bar, so it doesn't matter, right? And that's an important little nuance. Where does, so even here, is it a tag? Well, yeah, it's a cross, right? But they didn't drop together on the very next bar, so it's not necessarily bearish. So where do they tag? Right there. It's definitely a tag. It's late, right? It's pretty late. That's the tag. And then they both have to fall below zero. Right there. Now you know it's probably bearish. Look how far you are from resistance. Do you want to short that? I don't. I would just skip it and wait for a retest. But this is clearly bearish. So now a retest, I can short. And it does not. Will it give me it? Nope, does not happen. They both. Oh, I knew right away because they both got over the zero line. So once they get over the zero line, did that one tag? Oh, wait. Did it tag? Did I not see that? This tagged. So now no short. I missed that. Yeah, don't short this. It already tagged. So I was wrong about that. Yeah, there was really there's no clean. I don't have these lined up. It's hard to see when they're not lined up. Man. It's clear. Okay, can I please get this lined up? I wish this would work better. If you're far enough away, it will work. I don't know. That one's having a hard time. Okay. There. That looks better. Okay. So yeah, I just gotta have it in the right spot. We'll do one more. Is this a low? No. Not a low that I want to look for. The RSI is probably oversold, so we might get a bounce, but they didn't need very much bearish momentum, very much bearish volume. Now, I did get a big spike into the bottom, and you did have the next bar. I wish we could zoom in here, and you'll see the very next bar. They did rise together. See that? They are rising together at like exponential. See how they're both rising at the same pitch? So you could buy it, but be a scalper unless they can get above the zero line and hold above the zero line. They get above the zero line and give it up. See that? Now, can they get OBV below? Because then it's bearish. Nope, OBV can't get below. They're on opposite sides. It's consolidation. There. Got underneath, but without tagging. Not a bearish trend, but shortable right there, if you want. There's your continuation. Do they tag? Not really. Right? Not really, but we get this big OBV drop and a divergent low on RSI, right? The big one is divergent, right? So there's probably going to be some kind of a bounce. Only OBV gets above zero line. Once those both reject, it's going to go lower. That happens right there. And then there's a tag, right? There's the tag. So that happens here. Don't be short anymore, right? Here's another tag. Here's another tag. Here's another tag. Are they always the top? No, right? They're not always the top. It's just once you see it, watch for them both to get under the zero line and see what happens next. So here's the tag. RSI gets under the zero line. OBV does not. It's not bearish. You can buy that. And I know that's confusing, but that's just the way it works, right? You can keep doing that until they both drop under it, which is right here. So I would stop doing it here. Now in this case, RSI bounced up and OBV stayed lower. So that was still neutral. But then it happens again where they both get underneath. And so that would be bearish. And that one works. Right? Then here, this is tricky. They've got this huge RSI. Here, make sure we can see this. Huge RSI here, but very weak volume, weak OBV. So they don't tag, but there's just, if it's probably balanced and it's probably oversold, overbought. But you really don't know for sure until they both drop below the zero line, which happens here. Right? A little bit late for my taste, but kind of like a head and shoulders sort of thing, maybe, if you had the opportunity. It doesn't set up. High or low, where OBV gets near zero line but does not cross. That's the kind of continuation trade I like. Is this bullish? No. Right? You've got this is not bullish. You've got such strong RSI and you didn't even need that much volume. That trend is probably not finished. Okay, how about now? Well, we got an opportunity to resell right here when we couldn't break above the zero line. And then they rejected there, right? I get closer, but I think it's gonna, oh good, I can do it with the, okay. We couldn't get above the zero line here. See that? This was a higher high on OBV and it's a lower high. Well, maybe it's not a higher high than this one. It's close. One way or another, it looks like a sell. Tag. Rise together. If they go above the zero line, this could be over. They do. Don't be short. Right? So that's how that works. Questions. It takes some practice. But what I really want you to understand is that if you're already using something like OBV or RSI, by overlaying them like this, oops, that's right, I moved this, I forgot. By overlaying them like this, you're going to find that once you practice with it, you can see these conditions rather quickly. Like I could look at, like here, let's just, I don't want to go too far back because then the voodoo range levels won't be right, but let's just go like right here, right? Here, we'll turn them off. And I can't cheat. And I'm just going to show you, here, let me just back up. Just like randomly with that. Here, let's go something I can't even see. There. Okay, let's look. What happens if you're watching this, right? A lot of people struggle with trend day down. So, let's look at where trend day down. Here's a top, and then we'll trend it down. I'm just going to do it fast, right? And I want to show you how, just with those concepts, we can just identify, are we bullish or not? Or are we bearish? Are we neutral? Or are we definitely bullish or bearish, right? So, bearish, when? When they both drop under the zero line, right? They both drop under the zero line right there, right? But then this one recovers. Okay. So, and we were pretty far from support anyway. So you want to sell the retest, if anything. Otherwise, wait for the next one, right? So that's here. It's not too bad. Pretty much the same spot. How about this? Are you still bearish? No. Right? Get out of your short. They tagged. They rise together. Do they both cross the zero line? Yes. Right here. Right? So be prepared for a bullish trend or some kind of consolidation because that bear trend is probably done. What happens? OBV loses zero line, right? So now we're thinking probably balance, but then they both lose the zero line here. See that? That's bearish. That's a problem. This is probably going to hold. This is probably going to hold more or less once I see that. RSI gets above zero line. OBV is nowhere near zero line. That's a short once they both drop again. So right there, short. This should not break, or at least it shouldn't go much further than that. Goes lower. Am I bullish here? No reason to be, really, right? They're not tagging. There's a lot of volume. It's probably neutral, right? Goes back up. They both get over the zero line right here. Did I get stopped out? Nope. Right? So I can just hang out here and see what happens because we haven't left the range. But if I wanted to, I could start looking for a way out of this trade. For instance, here, RSI is below, but OBV continues to rise. That could resolve bullish, right? So if you wanted to exit the trade, you could right here. Otherwise, you'd wait for a tag. Well, right here looks like a tag to me. Could be wrong. Oh, but they don't both fall under the zero line, so it doesn't matter. And this is clearly a buy when it comes back up, because this one went under the zero line, the RSI, but not OBV. And that, I guess it didn't quite tag, but that was close to a tag, so that could catch some people off guard. So if you didn't cover here, you cover here a little higher. Okay, that looks like a tag to me. Let's see if we can get them both below zero line. Nope. This one can't. That's probably a buy. Oh, that's a tag. See that? Get ready for them both to drop onto the zero line. Oh, we did get over this a little bit. We did break over it a little bit. That's interesting. That's clearly a tag, though. Now they're both... Oh, no, they're not both under the zero line. There. Both under the zero line. This is probably bearish. There we go. Is the bear trend over? Probably not. RSI is really strong, and they didn't need to use a lot of OBV. Not a lot of volume, right? Probably not over. But look at how they rise together here. Now they're both above the zero line. Do I want to be shorting? Probably not. Not yet. Oh, what happened? Okay. Volume goes crazy. Probably an open or something like that. The buy is right here where RSI was down here, but OBV's nowhere near the zero line. That's a buy. Okay, it goes a little higher, rejects off our level. Makes like a head and shoulders kind of funky looking thing. And then this would normally be a buy unless they can, well, we'll have to see what happens when it turns around. So does it go, do both of them go into the zero line, or does RSI turn back up? Nothing to do, right there. Both of them fell under the zero line. They're just not lined up here. Okay. Both of them fell under the zero line right there. Do I want to be a seller here? Probably not. But I'm no longer bullish, right? So that one didn't give me much of a warning. It was just one of those squeezes with all the volume that went up, but no momentum, right? So you might see the a little bit of divergence here. Might have gotten you out of your long. But here is where you know it's bearish. Now I want to pull back to short, preferably. I probably would not have taken that. Some people will. Note here, they get OBV above, but they can't get RSI above. Not bullish, in my opinion. Okay, now they got both of them above. Now it is bullish, right? Here. Once this breaks, bullish. So if you shorted this, which I wouldn't blame you for doing it because of this rejection, you get stopped out here. That's okay. Stops happen, right? Now you know it's bullish. Which is a little bit unusual. Having all this... Yeah, I guess this got oversold. So there might be another condition where when OBV doesn't go anywhere, but RSI gets really heavy, that might be a condition to be very, very careful of holding. Because that's pretty rare to see that. That's strange, for sure. That might be like an after hours thing. Is that the open? It's the open. That's what that is. So, okay. But that makes sense. More stops at the open. So we'll just leave it at that. Big push up. No volume. They both drop underneath. It's probably bearish. Let's see if we can get a retrace. Oh, they both go up again. They both got above zero line right there. So I'm wrong about that. And I don't think it's going to trigger anyway. Man, oh man. So hard to get this right. There. Okay. So notice here they're not together at all. So this is definitely not bearish actually. This is your buy. Now that they're aligned, it's more clear. So down here, it looked like it might be bearish, and then it was neutral. And this looked kind of bearish, right? But then when they both broke over, you know now, once you get over this, you know it's bullish. And if you want to wait for the pullback, it's this, where the RSI goes under the zero line, right? So you might have taken a stop and then thought it was bearish, but didn't get set up again. And then you're like, oh, wow, it's bullish. And you feel like you're left behind. You got to wait for that pullback, right? And that's what this kind of helps you do. Big push up with RSI with no OBV. I wonder if this is going to fail. Now they're on opposite sides. Usually that's consolidation. Let's see if they can join together or make some divergence. Looks like they're joining together to the downside. That looks like a sell. Nope, they came right back up again. See that? They're like, nope. So flip to long. And you make your money back there. Whoops. Give me alignment, please. I wish I could keep this aligned. Damn, I don't want to see ahead. Sorry, guys. I'm just trying to get this to align. Okay. So here, you know for sure it's bullish, right? This must be holiday trading because it's kind of weird price action. Here you got only RSI underneath, not OBV. So it's not bearish, right? So you can probably keep buying dips if you want. Here you got both underneath. I'd be very careful here. I would not buy that one. Oh, they got them both over. It's okay. So that's a breakout. Might want to wait for a pullback, but nope. No pullback. Just out they go. Can I get closer to that and see what that looked like? See, that's sneaky. They got both of them under, but they did not tag. So we didn't, if we thought it was bullish trend, you shouldn't be fighting it. Did it look like a bullish trend? It kind of did. Okay. I wasn't looking at it that way. I was looking at like consolidation. So if you identify that it's a bullish trend, you don't need OBV. And what does a bullish trend look like? It's usually really green. Lots and lots. It's going to have a hard time getting RSI below the 0 point for more than like 1 or 2 bars. Right? So until we see that change, or until we see it tag, it's probably not done. So let's see if we can find a tag. Okay. Well, if we get close enough, this one looks like a tag. This one's rising while this one's falling. That's actually not a short. I was wrong. That's not a short. Maybe. Maybe one stop there. This looks awfully close to a tag. See how they both drop together? Can they get below the 0 line and stay below the 0 line? No, right here. That's your short, I bet. Yes? Now this looks like consolidation. See that? So I'm nervous whether or not this is going to continue. And yeah, look what they do. They get this huge volume down, and then they spike it. So it's probably not going lower. Oh, when they do it the other way, that's weird. This must have been... Oh, this is econ. Okay, so here, just based on this, we have to give up the 0 line for me to sell it again. Right there. It's a breakdown, but I think it's technically bearish. Yeah. See this? Hold on, let me get this aligned, make sure I'm right. Oh, interesting. We tagged. Watch for like divergence or for both of them to get above the 0 line. It might reverse. Right there. They both rise together. That's probably a buy. Oh, wow. So you got this. Way too much OBV. No momentum. That just totally sinks. Look at that. See this retest? Yeah. That's what I thought. Now they're both below the 0 line. Man, I wish I could get this to line up. Oh, almost. Almost. I moved the frickin' chart and the whole thing moves. What the hell's that? See, I don't have any problems like this on Sierra chart. Okay, so yeah, lots of momentum, right? No reason to really fight that trend. There's too much momentum to fight this trend. The RSI is too low and it's trending down. So I would not fight it. If you were going to fight it, it's when they both break over the 0 line, which doesn't happen till here. Is where you start looking for a buy. Probably on a pullback. When one of them can hold the 0 line, the other one doesn't, like right there. Or right there. Right here, if you think it's still bullish. Now look what happens though. They reject. Oh, come on. They reject together. See that? Tag, rejection. That's really bearish. Yeah. Yeah. Tag, divergent low. This might actually not continue much further. Divergent low. See that? We needed to get over the 0 line to actually be bullish, but I'd be very cautious selling these. Oh, there's another tag. We needed to get over the 0 line. See, I would not buy these, but I'd be very cautious about this move. Like that tag with divergence, that's the best one I've seen. There it is. Over the 0 line, you can probably buy that. Or buy the dip right here. When they don't align, now it's consolidation. Now this might reverse. Still consolidation, still consolidation. See how they're not aligned? Well, it's also not aligned with 0 line. But see how one's up above and one's down below? Until that resolves, we don't know which way this is going to go. It looks like it resolved lower. So I'd not be buying. Yeah. So that was tricky because we had some tagging down here, but they just kept making divergent highs. Like this is a good example of where you don't fight the trend, right? Instead, if you get this hidden divergence where you're getting higher highs on the indicator but lower highs on the price, you can probably just, I guess maybe you can just sell that as long as that continues. When does that stop? When do you get a lower high? You don't. This is still a divergent high. And then you just get a higher high on price. So you'd get trailed out if you did it that way. You'd make more money. But what I usually do is I'll be short here, right? But once it does this, I'm going to start trailing my stop pretty tightly, because if this goes above the 0 line, it's over, right? So my stop is going right behind all of these, the pivot before, one pivot before. So I'll get taken out right there. That's how I would do it. I would not hold through this, personally. Not after this move. Okay. Here's another. That's a nice tag. See that? So this bearish, right? As long as that holds under the 0 line, you're good. If it doesn't, you're not. But that's a good tag. See how OBV is staying under the 0 line, under the 0 line, under the 0 line, under the 0 line. He peaks above and then they immediately drop it. It's another short. If you got stopped out here, I don't think I would have. My stop is here. It's another short. Yeah. There are some nuances to it, but the important parts are when you get a tag like this, where they tag each other, and then they go the opposite direction. They bounce together, or they drop together. That is where you have to be cautious about following that trend. And then if they break the 0 line together, once they both break the 0 line, you know that trend is reversed most likely. And now it might not be for good, but like this is where I would think right here, right here, I would think we're probably going higher at this point. Here, let me move it over. Right here, I'd be like, we're probably going higher. I don't necessarily want to buy there, but I would now start looking for where's my support, right? And I'd be like, well, this looks like a pretty good support to me. Let's see if we can't get back down towards there, right? and preferably with confirmation on the indicator, such as a tag down there, or both of them going over the zero line would probably get me long. Not yet, not yet. So there we get to my level, right? If we can recover it and get both of them on the zero line, I'm probably good to go long right there. So I'm probably long this one, realistically. Targeting back here for the first one, and then watching here for both of them to drop below the zero line to tell me it's probably done. Not done, not done. There's the tag. Take some profit up there at the tag. You'd know right here that they both dropped after a tag, right? So my trade would be from 11,603 to 11,685. That's 80 points. That's $20 per contract, right? The problem here is I don't think I could take it with futures because I said my stop would have to go. I don't know if I did. My stop would have to go down here, 11,556, and I wouldn't know that I'm for sure bullish until 11,601. A 40-point stop is huge on NQ. That's 20 points per contract. So I have to do that with micros, or what I usually do is I do it with QQQ. Or if you don't want to do options, you can do TQQQ shares. So that's where you would start looking to get out, and then you severely trail my stop to probably this one. And then if they cross the zero line together, I could then look for shorts. Okay, so out of the rest at break even, basically, right? Because that's my entry. Not because it's break even, but just because that's when it happened to hit. And then, can we get a short entry up there? Does not look like that's a good idea. It continues higher, so that's fine. But then here's another one. So tag, both fall below zero line where? Oh, they don't both fall below zero line. That is probably a buy. I think we saw this before. Yeah. So you can get back in here, right? Is it perfect? No. Is it helpful? Hopefully. Okay. So that is one thing. Now, interestingly, this works a lot better on Renko than it does on candles. Okay. Renko is very unique in the way that it moves from one part to the next. Let's see. How do I just want to see what's going on now. Oh, nice. So at this very moment, we had a tag at the top. Oh, wait, those aren't aligned. They need to be aligned first. I'm looking for a spot where the zero lines go together. And unfortunately, moving the chart actually changes that. And if you're too close or too far away, it's very difficult to get them aligned. And I don't know how to fix that. If someone does, tell me. Oh, there it was, right? No, there. Okay, so the tag was here. That's close enough. And then they drop below here. So this is where we know it's probably bearish more than bullish, right? But we had a nice little bounce right there. And then they both gave it up. So that's your short, if anything, is right here. Short. This is tricky because it goes above the zero line just slightly, right? But there was no tag down here. So if anything, this is just consolidation. So you buy down here and short up here when it turns. Now they're both under the zero line. Now it's bearish, right? And look, you could still short these pullbacks because they're not getting over the zero line. So this is actually a good short right here. Let's see if we had a short on the Sierra chart one. Just want to show you that. So that level was, you have to trust me here, it was 10,970, let's say. It's this right here, right? So here, oh, and then what was the point where they both broke down? It was that confirmation breakdown, right? The test, the touch was at 1400 Central, 1500 Eastern. Up here, I would know about it for sure, confirmed, because they both moved the same direction after that, dropping together, I mean, at 10,995. Let's see what that looked like on this one. I just want to show you this. 1400 at 10,995. Okay, so that system told me to be careful with longs when this dropped through 10995. Right there is where that system told me about that. Is it good enough to trade NQ? Probably not, unless you got a really nice retrace. Because at this point, your risk would be way up here. This system gives me pink bar, aggression, whoops, to the downside. So my entry is here or on a pullback into that area here. So I know earlier, which means I can put my stop up here and only risk 15 points. So that's why this system you pay for, and the other one you don't, because you can make big money doing that, right? But look at this, you get confirmation here. So there's your opportunity to short if you were using like the footprint or something. The problem is your stop needs to go up here, right? So it's not 15 points, it's more like 20 points. But I think it works. Yeah. Oh, and there's another one. This is another sign of aggression. So there's another short. That's a clear short right here. So even if you put your stop here, got stopped out, you'd get back in and you'd get it that way. And then the next confirmed one was here. So went up, then they both dropped, they both fell below the zero line, right? That confirmed right at this purple line. 10970 at, oh, what time is this Eastern? Right here. 21, so 20 on Central. And this is on Central. So we go to 20, give or take. And 70. So that system told us to look for a short here. Okay? Where does your stop have to be? Probably up here, maybe here, right? So 70, you're probably 25 points of stop. Not impossible with micros, but you're going to pay a lot in fees and stuff like that. So probably better to do it with options. But one way or another, now let's look at how this system handles this same area. Well, with this system, you've got trap back in, star, that's a short, right? And then continuation short here, which means you could now move your stop to here. So 2 opportunities to get in with less than 20 point of risk, but realize that you wouldn't have had this if you were trying to use this as confirmation. You wouldn't know about that for sure. You wouldn't have confirmation until here, and then you'd miss those trades, right? If you weren't being aggressive enough to take that. And now look, you don't get an opportunity for a pullback until here, and that one gets stopped out, right? So you have to be really patient for that location and be trusting that, like, maybe that might be shortable. Nope. So you take this one, maybe star, right? So you get short here, and that one would pay you back, and then some, right? So if you're not going to be aggressive, what I'm trying to say is when we were aggressive, we took a stop, right? And then got paid big, maybe twice, right? When you were patient and waited for confirmation, the problem is you didn't know about it until 70 here. And then if you were aggressive, you just sell the breakdown, and it actually worked this time, but they don't always, right? But where do you put your stop? Up here, 25 points higher. So you'd have to do it very small size, right? Not wrong, just different than what I do. Instead, if you wait for the pullback, this first pullback was just not back to your level, so you really shouldn't be shorting that. You want to be short at least back up at 10970 where you saw your signal. So this is kind of not a great short. Plus, if you look at here, 2252, what's happening on this chart? 2252. Is that possible? Yep. So it's this. So would you short that? No, right? There's no reason to short that because you don't have, look, they're both going, you've got the RSI is going above the zero level, right? I can't get these aligned again. And I'm not this close. I want it to make it big, but when you're far away, it pretty much stays still. but it's hard to see then kind of. But look how right here, you wouldn't know for sure what's happening here, but the very next bar, RSI goes above, and then so does OBV. So certainly by 10.987, you know it's not a short, right? Well, by that point, if you took this one, it's too late for you. So you're just too aggressive. 8.4. So by here, it does not look like a short on the trading view. And so that might keep you away from this one, right? But then you probably also missed the one at midnight Central, which is 1 Eastern. Let me see what that looked like. 1 Eastern, right? 5. Would you have gotten that one? Oh yeah, probably. This one you'd get confirmation at... Again, it's hard to tell when they're both dropping below 0 from this far away. It looks like it's the second bar, yeah? Where they're both... Does it... Yeah, it might be that one. They're both red. I don't think they're below 0 till here. Let's say it's this one. That level is 64 is your confirmation. There. Once again, it's late. So now you've got a 25-point stop instead of a 15-point stop, right? Otherwise, you might get stopped out here. Like that. See, if you put your stop 15 points from your entry and you enter here, unless you're going to get out in like 5 or 10 points, you're probably going to get stopped out. And that might be pretty frustrating. So instead, you got to find a way to get confirmation earlier, which like using the algo, right? Like using this algo. But what's cool is that you do get another chance, right? So if you think it's still bearish, what I'm trying to say is the TradingView technique with the RSI and the OBV on the Renko, it might not be the first warning, right? It might not be you might not get the very earliest warning, but you'll probably get you'll get confirmation that you're doing the right thing, and that alone might be valuable, right? But realize that if you enter right when you get this confirmation, that your stop is going to probably be at least 25 points away. And so it might be a little tricky. Now, you could try to use a smaller time frame, and I'm not saying that's not going to work. It could, right? Maybe we can try it. Let's see. 15. Let's use... let me think about this. So... maybe 3.75? What does that look like? Not 37, 3. 3.75 might be a little better. Let's see what that looks like. So here, how do I get them lined up? Line up, you bastards. There. Okay. So where are the tags, right? It's a little hard to see, but this one's right here. See how they flow together right there? Whereas this, there's gray in between all the way through. See how they never actually tag? They don't have to cross. They just have to kind of touch, right? And then here there's no tag. Then the tag is here when they both drop together. I know they don't technically touch, but they're dropping at the same pitch. Here it is right here, dropping at the same pitch, right? So that, let's just look at those quick. So this one alerts you here, right? So first alert at 11:04 at 15, 11:04. So 15, that'd be 14. That's this one, 11:04. So that's just right here. That's not too bad at the voodoo range level. That's just a little bit lower. Maybe we're at 20 points now. But that's just the first alert. The confirmation doesn't come until you get it under where they both get under the 0 line, right? Which is the close of that one. 82. right there, right? So you might, if you entered right away and you put like a 15-point stop, you'd get stopped and then it would go without you, right? So you got to be really careful about that. Just be like, you would not be able to do it with a 15-point stop, right? You'd have to put your stop here. You're still probably 25 points away most of the time, unless you have another way to get in, right? Like I said, if you've got another strategy, cool. But it doesn't make that much of a difference, even with a smaller time frame, is what I'm trying to show you. Is that because you have to wait for that confirmation, you're not going to get it up here. You're going to get it down here. Now, it's still a good move, but your risk needs to be reasonable, right? You don't want to risk $2,000 to make 200. So just make sure you actually have the risk reward. But based on this chart here, let's see, do we have any different read on the smaller time frame out of curiosity? We have very weak down volume. See that? They're not able to put any volume in. And then both of them, so that looked bullish here. They both got above, right? No tag. They only both go below way down here, but look, they're not pitched together. See that? They're separated completely. That looks like consolidation. It's probably bullish now on this time frame. See the divergence? See that? That divergence suggests to me that it's probably bullish. But look what happens here. We've got another bar forming and we can't see the information on the previous bar because the market's going too fast, and this could still repaint, right? But if you look here, this looks like they might be trending together. If OBV can cross the zero line. But see that, how we still haven't gotten a dark green bar, which means this bar might disappear if we start dropping. So it's really not confirmed yet. So even though it looks back here like we knew right away, or whatever that was, you might not have known for sure, because until these turn dark green, you're not going to get the there we go. Now it just showed up, see? So now we find out about what happened before. So you're late sometimes. Not always, but sometimes. So here you see RSI is not getting over the zero line. It's not trending up. And this is not like some sort of bottom after a downtrend, but it definitely could be balance. Right? In which case, remember what to do? Well, you can find a nice, the biggest, most recent. Either one of these will work. Oops. There we go. And then, so your buys would be here, right? Probably this one, or else at that level. You could technically buy it here. See that? You could buy, this one rejected, so don't buy that. This one looks okay. See that? Get a little something there. And then this is trying to go, so right now it is trying to go higher, right? But unfortunately we don't have the information yet on that last bar. So until that last bar comes out as bullish, I mean, as long as it closes bullish, it should be fine. But it doesn't always know right away. But this has to cross back over that level, and then it's a buy. So whereas on this chart end. On this chart, on the other hand, the confirmation of the buy, happened. So you knew it was potentially bullish here, and you're looking for entry signals. So it is trapped back in right there. That's your buy on this one. So you already knew to be long on the algo, and you'd already scaled 10 points. So you'd have made $200 on the algo and basically paid it for the month already in that little moment, almost. Almost. Whereas on Tradingview, you're still not totally sure if you want to be bullish. Or I mean, sorry, you know you're bullish, but you don't know if you want to be a buyer yet. And so you would have to wait for some sort of pullback. But what I find is useful, and see now we've got 2 bars that are light green, and we still don't have any information here, which is just unfortunate, just the way that TradingView works. So all of a sudden, those are all going to come in, and it's going to show it like above the 0 line, confirming that we should have been in the trade, right? But once we do get that information, and we know that it's bullish, even though it might be too late to act on it right now, we could get a pullback into that area, and you could try to buy because you know now that it's bullish, right? But that is the challenge with the TradingView versus Sierra chart, is that with Sierra chart, once you see that bar print, it doesn't change, you know, and you even get a little bit of warning that like, oh, this might be a pink bar. It's exactly the opposite on the Sierra chart, Renko, where like here we've actually gone the distance of 3 potential bars, and yet they could still repaint because they haven't turned dark green yet. They're like that aqua color, which means it's not confirmed yet. And then all of a sudden they're just going to turn green, and we're going to get all of our indicator information. And it's just, like I said, it doesn't always happen, but it primarily happens when you have a trend like this, like some sort of a big impulse move. Like these are the ones that it can literally take like 5 bars for it to show up. So you kind of you have to sort of, once you get used to how this moves, like I know now that this is going to be above 0 as long as this holds, and I can tell that it's good enough that it has the potential to hold. I obviously don't know it's going to hold, right? But it's got the potential to hold. And so what we can say is, as long as that holds, if we can get a pullback into that area, it's probably buyable. That is still useful information, right? It means if the next move does this and this, I can buy it right here, right? Because I've got confirmation on the RSI OBV that not only is this good for 10 points, but that this, oops, that's the wrong window. You guys don't want to see that. But in addition, there we go. So what does it look like? Finally showed up. So now see, we've got a blue OBV and a green RSI on a done bar, right? That's bullish. Now you have to ask yourself, where do I have to put my stop? Where's my risk? Oh, it'd be down here, right? Do I want to be a buyer up here? Where's my target? Like right here, right? Maybe it'll go higher, but I really want a pullback now, right? What does that pullback need to look like? That pullback needs to happen without pulling both the OBV and the RSI below. And so we could take a look here and say, well, what are the chances? How does this pitch look? How does this angle look? And what are the chances that that this is just going to spike back down again, right? And or just wait for it and see what happens. And if it gradually drops down and then gets bought up down here, you could follow them in, right? But I'm not going to buy the breakout. But, if you're okay putting your stop down here, you could. I'm not. Not with futures. Not with that kind of leverage. But that is often what see, look at what happened last time this happened. We got a nice little impulse move. But unfortunately, we've already put in 1, 2, 3, 4, 5 candles. So let me just see, what if I switch back to 7.5? Does that solve the problem a little bit of the unfinished waves? What does it look like on this higher time frame? If I'm just using it for confirmation, I might as well use the bigger time frame, Oh, I can get rid of this. Don't need that right now. Well, it's pretty close. We can still see the colors. On this time frame, we have not confirmed that we're going higher. So this certainly could just be some sort of a consolidation period on the higher time frame. So that's important. There we go. That's pretty close. That's not perfect. There. Okay, so here's our low. most likely, right? We've not had a tag up there, but they did both fall below the zero line and then tested the zero line and rejected. So it needs to push quite a bit to get going. It's probably just some kind of consolidation on the higher time frame. That's what I would say. Is that it does not look like on that time frame, the 7.5, it does not look like we are at a low here. But on the smaller time frame, it's probably worth a scalp. The problem is we didn't get notified about it until like right before the resistance. So that's not always how it works. It's not like it's totally useless. But what you're going to find is if you're trying to do it with futures, you're going to get frustrated because you're going to have to risk a lot and your win rate just won't be that good because you're getting into moves so late unless you can get a retest. So the things that will work relatively well versus the things that won't, okay? The things that will work relatively well using this system, and I'm going to wrap this up because it's getting kind of long. I had like 2 other ones I'm going to show you, but I got a little deep into this one. If you liked this video, by the way, let me know if you want to see more. I've got 2 other ones I can show you. One of them, here, let me just give them to you real quick so you can go look at them yourself, and then we can talk about how to use it. One of them is called Carrie's Willie, and it uses the William %R as well as the CCI. That one is public. If you just go to Carrie's Trades site, or just look up Carrie's Willie and hit star and then click on it to add it to your thing. But on his, if you go to scripts, you're going to see all of his stuff. Nope, that's not it. Not scripts. Where is it? Ideas, scripts, followers. No. How do I get to your... Should be here. Well, this one might not be available to you guys. I'll have to look it up. Let me know if you watch these and you try this. You know, only 7 people have gotten it. Maybe this is private. You might have to ask for it. What you can do, most likely, I don't know what I'll say, but if you want, you can go to @CarryTrades. Maybe send him a DM, let him know that you talked to me and that you want to check it out. Maybe he'll let you see it. But what it basically shows is the yellow one is the %R, I believe. And then the white one is the CCI. And what I use it for, I'm not going to explain everything because it's getting late. But he's got these little green and orange signals. See that? The little dots. If you watch those, and then you can also watch for %R to have divergence, is pretty useful. But basically what you want is when you are not trending, right? When you've gotten into some form of consolidation, and then you get one of these signals. So like this one here, I'll just do it. I'll just show you. Whatever. We'll go through it a little bit more later. So here we get an orange dot or whatever, orange dot here, but we're trending higher. So we're not going to fight it, right? That's just, and then like here, we're trending up, right? We're breaking through a high and we get an orange dot. We're going to ignore that one. Okay. But when we get them during consolidation like this, and especially if the bigger time frame is going in that direction, that actually is a pretty good sell. Okay. And let me find some buys that do similar. So I don't want to cherry pick too much, but here's another good sell. Look at this. So like this one, right? And this one. And see how there's like 2 right away? That's really good. And then what's better about this is you're making like a higher or maybe a neutral high on price, but on the %R, which is the yellow, you're making a clear lower high, right? So that makes it way better. Notice though that there are signals earlier, right? There's one here, there's one here, and there's one here. And at least one of those are going to stop out, right? This one. That definitely gets your stop swept, right? But if you look to the left, the reason for that is because you were in trend up or trend up, right? And you don't necessarily want to use them when it's in trend up until you got some kind of confirmation that you're probably going lower. So you'd have to. What I do is I combine the idea I just taught you, right, with identifying where the RSI and the OBV are, or that fix that OBV E by K, this one, when they're both doing the same thing, I expect the chance for the start of a trend to be higher, or the end of the trend, I guess. And then if I can get that to, so that would be how you catch the trend moves, right? Is with this one. That's what's going to work really well. What's going to be hard to do with the one I just taught you, the OBV and RSI, it's going to be hard to scalp with it in the neutral periods because of that lag in Tradingview's Renko. So because if you get lag, if it's really slow, it might be okay. But if you get lag like we were getting earlier, your entry's not gonna give you enough reward for your risk most of the time, unless you have really volatile markets where you're like ranging back and forth. But like, if you want to do things like find this tag and then wait for them to both get above the zero line. See, they try here, but it doesn't actually happen to here. By then they're not together, so that's really not a good buy. But this is where you know that you have an opportunity for a buy coming up. And so you want to get long at support, or support right here. So buy this, right? That will work as long as you buy the dip and you don't just immediately buy right when you get the trigger right here, unless it's trending. If it's trending, it'll work. So if you have confirmation that it's trending, like this, right? Like let's say you saw this and you were like, maybe you're not going to fight this, right? I'm not saying you should fight this, but once both of them gets underneath, well, you're way too far away from your risk, right? Because that happens here, is where you both get dropped down after the tag. So your risk is up here, so you want some kind of a pullback and then a rejection, which you get there, right? If you want to wait for the next confirmation, it's when they both drop underneath the zero line, or at least when they're dropping together. So somewhere around here, right? And then definitely by here, you know it's bearish, right? So if you have some other way to execute trades, like using location and stuff like that, you can start doing it. Or you look for the highs now that don't tag. So like this or this. Or the highs that you can't get over the zero line. Like, you need to pull back. But there's see the little wick right here? That little pullback did not get both of them above the zero line, and there's no tag, so that you can short. Right? Still no tag. Here's another one. You can short this one. Right? Now this one kind of looks like a potential tag. That's a little scary. And this is clearly a tag. Right? So now we're only looking long. And then there's the confirmation. Here. You might not get the pullback, but if you want good risk reward, you're going to have to wait for it. And you want to see him hold it. Right? So this, when OBV, the blue, is above. Well, shit, they're not lined up again. OBV is above and RSI is not. First sign of aggression, buy it. Now it's potentially a trend, right? It's like a consolidation within a trend. But look, green, OBV is staying above, right? That's good. That's what we want to see for up. Uh-oh, they both fell down below. That's not what we want to see for up. We should be looking bearish only. Do we want to be selling it here? I wouldn't. I want to put my stop up here, so I want to retrace. Let's see if we can get a retrace. We get a retrace with a tag. That's great. Sell it. We already had confirmation it's probably bearish. We got a retest with a little bit of a tag where they both drop together. I'd probably sell that. Yep. I'd probably say, oh, but not here. Look, that's bullish. Get out, buy it. Oh, a tag and drop. Probably going lower. See how difficult it is to do these little moves? Very difficult. Instead, if you just tried to look at it as it's bearish, so I'm not going to do any of the buying. I just want to take the sells. Well, you'd maybe miss out on this, but you'd catch this one, right? And so you're going to get at least something for that. You might miss out on this, but there's the tag, right? So by here, you know it's bearish. And by, oh, they're not both together. By right here, you have a trigger, and you're good. So it's not perfect, but for something that's free, it's useful, right? If you want to improve it, and that all makes sense, what you can do is you can say, I'm only going to execute the trade when I get with these trend trades, that I'm only going to execute them when I get one of these pink ones when I already knew from this system that I wanted to be short, or I get a green one when I already knew I wanted to be long. You don't just want to buy every green and sell every orange. You have to have some sort of supporting evidence for why that's an area to buy. Because look, I mean, it's going to tell you to buy this, right? And if you don't have a sense that, like, if it doesn't continue going higher, that it's not bullish, right? When you get this, if you don't know that it's bearish now, and you get another green one and you just buy it, like, you're going to get crushed, right? You can't just keep buying the green ones because you want to be bullish. Like, don't just buy that. I don't know if it works, but like, and I wouldn't buy that either, technically, unless I had support. So now if I look up here, I would be like, okay, now let's look at both of them, right? That was just like intuition. Like, looks kind of bearish to be looking for buys, right? Does this one have any reason to think that it's bullish here? Do we have a tag? Not really. We kind of went up together here, maybe. We do have divergence, right? So maybe you could do it. It's a little bit aggressive. Once we get both of them going up together like this, it's probably okay, but it's not perfect, right? What about here? Well, here we have clear divergence, and that's pretty close to going up together. Yeah, see that? They're going up together. That looks better to me than the other one, personally. That one fails. This one clearly had a tag. No question. Right on top of each other. And then they go up together, right? That one looks like the best one we've seen. And that one works, right? Now this, do we sell this pink one or this orange one? Well, this isn't bearish, right? We've got OBV nice and strong, RSI above zero line. There's no tag like this where they're lined up. Nope, I'd skip it. It's bullish, right? Do we sell this one? Oh, well, that looks like a tag. They're dropping together. Maybe we can get a little aggressive here because it looks like they might both be dropping to zero. So if you want to get in a little early, you can get there. Otherwise, wait for confirmation underneath the zero line. Now you know it's probably bearish. The problem is, where's your target? Back to this support. Your what's it called? Your resistance is up here where you put your stop, and that's not very good risk reward. So you might have to skip that one or wait for a retest. Okay, there's your retest. It tells you to buy. Should we? Well, that's actually a pretty good test, right? And they raise together. That probably does work for a scalp. Probably could buy that. Yep. Now there's no signal here, but remember, we knew from this system that we might want to look for a retest to short. So we could do that if we want. Otherwise, we wait for the orange. If it doesn't happen, it doesn't happen. Oh, look, it wasn't a good idea to do that impulsively. There's our orange dot. And we're at the location we wanted. That's probably our best sell yet. Do we have any reason not to be bearish? Well, these are tagging, right? They're lined up. They're both dropping. It could be. And look at this, right? And that one works. And then this one says be bullish. Do we have a reason to be bullish? Are they lined up when the zero lines are lined up? If I can get the zero lines to line up. Man, that's annoying. You can tell I don't use this very often, but I used to. I can't get them to line up, you guys. I can't see it. Unless I'm really far. If you're far enough away, it does it pretty much automatically. But when you try to zoom in, it's like sometimes they do and sometimes they don't. Let's try zooming in this way. Oh, no, that doesn't make a difference. Weird. It's like it just won't sync now. Unless you're like right on top of it or really far away here. What if I do this? Oh, you know what? I wonder if I have to reset this. There now. Oh, there we go. I don't even remember where I was. Oh, but I can only zoom in like this far. That's okay. I don't remember where I was. Doesn't matter. You get the idea. But like you can sort of see how when they are going together, when they're all falling together and you get the orange dot, your sells are going to be better, right? And as long as you know that you're not fighting the trend, it's probably pretty safe to sell the orange dots. You might just not be able to put like you have to put your stop above resistance, right? So like this one, that's probably pretty good, right? Are all these green dots going to work? No. Some of them you're going to get totally crushed, right? So you need to know the trend, but and then like I said, monitor for divergence if you're trading the trend in pretty much all of them. And when you start to see all of them making lower highs, and then prices making higher highs, but they're getting weak. Yeah. Now we might want to start thinking about looking for shorts, right? So like this one, I might short. Yeah, that makes sense. So questions? Anything I can help you with? We'll do the last one another time. This one's kind of complicated, but I really like the carries, Willie. You just have to know what you're looking for and what you're working with. Yeah, and I like same with the RSI and the OBV. It's better than just like a parlor trick, right? It does have value. It's just hard to turn it into a really robust system. It's just a piece of the puzzle, right? But it is useful for learning how to analyze price action, because you'll start to see, you'll be like, oh wow, I thought this was probably bullish, and now it's confirmed it because they're both above the zero line here, right? And so you'll start to see that kind of thing, and you'll be like, okay, now I'm gonna have more confidence maybe going to my footprint, right? If you don't have the algo, maybe you'll go to your footprint now, and you might have more confidence looking for the locations where you want to start getting long. And you might be like, well, I've got a lot of sellers trapped down here. They came out and they retested, they couldn't get underneath them. That low this low down here should probably hold. So therefore, if I get a pullback maybe into VWAP or a POC or whatever that is, or like another one of these important areas, and they defend it and I'm making a higher low, maybe it's worth it to try it. Is that going to work 60% of the time? I don't know, right? But it'll probably, I'd hope, help you at least have a little bit of confidence that your direction might be correct. And rather than like every single time you get a down bar thinking like, oh, I think I'm wrong, maybe I should flip, right? If you have some way that doesn't change very often because it's kind of on a somewhat higher time frame that says like, look, as long as this stays up here, you really shouldn't be selling, right? As long as these are both rising together above the zero line, rising together and broke above the zero line like that. They both are. It's just hard to see. This one's blue and above the zero line. This one's green above the zero line. There's a relatively good chance that the next direction is up, right? And back here, we started from all the way down here, right? By the time we got that signal, we were all the way back up here, right? And we'd already used all this energy. Well, look, we got tight, and now we're breaking out above both of them right here at that midpoint. So the issue would be if we make a higher high on the indicator but a lower high on price, or we make a higher high on the indicator. No, it's mostly the other way around, because if it's a bearish trend, then those hidden divergences where the indicator gets really high but the price just can't break out, that could result in a sweep down. And notice we did not get a green dot on the Willy since here, right? And these back and forth periods, they'll still work, but you're going to get a lot of these little stop sweeps. Like this orange one gets swept out, and then you'd have to take it again. I mean, my system does that too sometimes, so I'm not saying that makes it unusable, but just be aware of that, right? And that's why you want to have something else to kind of confirm what you're doing. But yeah, it's interesting that we did not get a green dot down here, right? We didn't get one of these squares at this one. So if you were waiting for that to confirm, you just would miss this one, right? And I don't know why that, like whether or not that's a sign that it's unlikely to work, I couldn't tell you. But what I do know is that when you have everything aligned and you have some way to systematically tell you that this is a good time to get in, like one of these little dots, or this is a good level. Like here, if you got the dot and you're like, okay, I want to be short. I've said this a couple times now, but if you were like, okay, I got this, I want to be short, but you look up here and you're like, oh man, I don't quite have what I want because RSI is still above the zero line. Well, all you have to do is you have to mark that area, like this purple here, and you say, well, if I can get it under the zero line, which happens here, I'm not going to chase, but if I can come back up and they can retest that area and they reject out of it like that, right? And these conditions are still good, like everything's still falling together, right? Falling together. You can sell it now. It's the same price. It's just later, right? Maybe even here. If you looked at this and you were like, I don't know, green, like the green hasn't quite gotten under the zero line. I think maybe I'm going to wait. I mean, you get another chance right here. And look, green falls under the zero line right there. See it? Here. It's purple and it's red. They're both under the zero line, right? There's no green and there's no blue. That's clearly a short. And you get the good one, right? So you miss all these little ones, who cares? You get the nice, I mean, this short is 1103 potentially to like 923. That's 80 points, man. Even on micros, that's respectable, right? And all you had to do is wait for those to line up. But of course, don't make all these excuses and be like, well, I don't have a green dot here, but I think it's bullish, so I'm going to buy it. Like, I don't recommend doing that, because what you're going to do is you're going to practice. You're going to practice going off process, and you're going to become comfortable with that, and then your only fear is going to be like losing. And that's not what you want. You don't want to be fearing losing a trade. You want to be fearing trading off process and get to the point where you trust your process so much that the only thing that keeps you coming back is your desire to run the process. If that's how you're thinking about trading, like you just want to run the system, you're going to do fine as long as you do that, right? But if you're thinking, I just want to win, and I'm afraid to lose, you're going to have a hard time, right? Even if you have a system, because you're probably not going to follow it. Because you're going to be afraid to lose, and you're not going to go the distance you need to. You're not going to go to the distance you need to stick with that process. So that would be my own personal advice as someone who's been doing this for a little over 7 years now, which isn't a ton of time, but it's enough to know something. So let's turn the voodoo range back on and make sure we haven't had any changes there. Then I guess I'll get some rest. So nice tight rotations, right off the VR levels. And then if we want to, we can take a look at the bigger picture. Okay, we have a similar system down here where we're looking for things going together above the zero line. And we got that right here. Similar idea. They have to be all above zero, right? And that happens right here. None of them are down here. The bottom is empty, right? Confirming that it could be bullish, and you get the move. Same thing up here. It's just a different system. Right there. They're all together, above, going higher, right? So by here, you know not to be selling. That alone is super helpful for me, right? Just knowing don't be short anymore. If you were bearish, don't be. But even without any extra indicators, This is a 3-minute chart. We can just look at price action and the voodoo range levels, and you can clearly see that we're in balance, right? And that most likely we've been staying within a range of about 2 VRs, which is totally natural for the market during balance. Totally natural. If it goes beyond 3, it's probably trending. And what's interesting is that with such a tight range, like I mentioned before, we have 1, 2, 3, 4, 5, 6. This move went 6 VRs, right? This one was clearly a downtrend still, right? And then, so you could say that this was an extension, but this straight up without, I mean, I guess what you technically did is you went up, and then you retraced one. So that's not fair. Up, so that's 2, and then retraced one. 1, 2, 3. Retraced one. Right? Tried to retrace, couldn't. 1, 2. Retraced one. 1. Retraced. 1, 2. Retraced 1, 2. See how that's generally how it works? 1, 2. 1, 1. 1, 2. Let's see. 1. Retrace 1. 1, 2. Retrace 1. 1. And then retrace, and then go the other direction. 1. And then the other direction. 1, 2, 3. So this bar right here, without any retraces, went 3 VRs. 1, 2, 3. This one is the abnormal one here, because it's at the close, but there's there's no retraces, and it went beyond 2 VRs. It went almost 3, right, before it did this. But then what did it do? It came back and tested that area, rejected it, and re-auctioned that bar. That should make sense, because the natural place for it to go was here, and it went too far. So of course it comes back there and checks, breaks down. Where is support? It's under here, right? So we could re-auction this back and forth and back and forth and back and forth all night long, right? And never really get anywhere, especially if we're trying to go lower. Or if the auction is complete, what we're going to see is that these stops get taken out that are sitting up here, because that's where sellers put their stops, is above swing highs, right? And then it would break above those, and then if it's trending, it can go 1, 2, 3 higher and get up here, right? So if I had to guess, I would say the momentum appears to be to the upside because of this bar right here. As long as this holds, I'm going to assume that dips get bought, right? But I'm not going to have a way to know whether or not this one is the one that that breaks out, or if we need to pull back 1, 2, 1, 2, 1, 1, 1, 2, right? I don't know. There's not a great way to know what the next pattern's going to be. But until they get out of this bar's range here, it's just scalping back and forth, right? So yes, we have confirmation on the indicators from a smaller time frame that things are starting to look bullish, but that was on the 3-minute. So now we're on the 15-minute, and now, like I said, I want you to think about it the same way as what I showed you before. And we've got a touch here, right? But they can't get over the 0 line. They come back, they do a lower low, can't get over the 0 line, get over the 0 line right here, right? So they've had a touch, they basically did a head and shoulders, and now they're trying to break out. Is that bearish? No, right? Is it bullish? Probably, right? And we can look at this indicator, same thing. We got a touch here, they broke over the 0 line here. Now this one swept those stops, which happens a lot on this indicator, and then but then it's consolidation. See how these are below, but the green is up here, right? It's not red and all the lines are down here. The lines are down here and it's green up here. So that is just consolidation. That's not a trend. You don't put your stop below higher lows when it's consolidation. You need to scalp or buy down here and then just target the midpoint and sell up here and target the midpoint and accept that you're probably going to get stopped out once, right? But when it's doing this, when they're not together, when these overlaid indicators are not together like that, where green is up here but all the lines are down here, that's just consolidation. That's not bullish or bearish. That's rest, right? And what do you know? We spend most of the time inside of one VR, and as soon as we try to test above another VR, well, we're going to come back and we're going to try to find buyers at that voodoo range level. And when we don't, guess where price is probably going? Back to this one. Because it's just consolidation, right? Here we got one line up here, but not the purple one. So if this closes purple, if this closes red, and that purple's not over the zero line, it's not bullish, right? So even with that alone, just knowing that information, you'd know that it closes in 11 minutes, okay? You don't know where it's going to close, but it basically means I have 11 minutes for this to resolve bullish. And before, I was thinking, I said if I get a dip into this area, I thought it was probably a buy. That happened right here, right? If I get another dip now, and then we stop down there within 11 minutes, and the 15-minute bar closes red, and we're down here, and I'm like, oh, maybe and then it bounces from there. I don't want to get long because I don't have confirmation that it's bullish. So in that case, I would have to get under this low to buy under the low, expecting continuation of the consolidation period, right? I'd no longer be looking for higher lows or like some sort of like a head and shoulders type thing here. That wouldn't make sense here because it's not bullish. There's no bullish momentum. Interestingly, they do have dominant volume, but I don't think that's going to matter because they only have 11 minutes. Unless they do it right now. If they can push here, it might work. But they need to get that. They need to close this next 15 minutes up here, right? We need this bar to close bullish to have any chance of immediate continuation. So let's give it 11 minutes and then I'll head to bed. We'll do a little bit of trading here and I'll show you how you can use them all together. Oh, here, let's check because we know that's all you need to know about this. We got 11 minutes to finish it basically. So let's check this. Do we have any new information here? It looks like they're both over the zero line on our 7.5 level, but we're at resistance, right? Not a great place to buy. Normally I'd say buy a dip, but first we need to break out because otherwise the candlestick chart's not going to agree with us. So if we can break out here, it's probably bullish. Then once we break out, and a dip can be bought. Otherwise, you can try to be aggressive and just buy if it pushes here. It's not wrong, it's just not what I usually do. So we'll give it 10 minutes and see what happens. If I had to guess, I'm guessing it's going back to the low. That's my guess. But it is getting late. Bell's gonna ring to start again at 5 hours. So I gotta at least get like 4 hours of sleep. So. Because normally I would say a purple bar followed by an aggressive bullish bar would be pretty good, but the problem is resistance is right here. So not so great after all. Pattern is good, but location not so good. So we'll just wait. Let's see what happens. Probably nothing. We shall wait. Not surprisingly, it's looking a little weak. It appears that my intuition was probably right, and we're probably going to go a little lower. Which is interesting, right? Because we saw on the TradingView, what's it called? The Renko looked pretty bullish, right? This looks like it's got a chance to rise here. But we did not get the green dot on the Carries Willie. So we have most of the pieces, but not the filter, right? Not that final filter that says, that confirms that not only could it go up, but that it might actually be in a trend. Or it might be ready for a bigger move up. Oh, look at that. They're trying to push it. They're trying to save it. Everybody knows they need to push it, I guess. They might do it. They just might do it. Can they do it? Or would it be 76, 75? We could try it, I guess. Okay, we'll take it. What the hell? It's valid. So I need 76, 75 to trade for this to be closed. It's probably not going to work, but it is purple bar. If there's no algo on this when it closes, I need to immediately exit. But if it's green, it's all good. It's just a little bit high. I don't know if it's going to actually trigger or not. It's probably not a good idea. I hate breakouts. But I will give it a shot. Just because I've got, like, I don't have that Carries Willie filter, but everything else looks like it might be ready for a lift.
Order filled.
Okay, so it got the star, it got the volume, it got the green bar. I mean, and it's got the purple bar before it. We've got confirmation here. I guess I could have gotten in a little earlier here. That probably would have been the better choice. Is to just use the 15 tick to get in, since I already got this purple bar star here. But we do have a divergent bar down, so that's interesting. We need to trap him for this to work. Now, we did see on the candlestick chart that we really need to get this finished before the 45-minute mark, right? That candle needs to close green, remember. So, thankfully, at the moment, it's all good. It's green. That's what I mentioned, is that just needs to not reject, right? That pink line needs a chance to break out here. So this needs to close green. So if we come back down underneath 75 and it closes red at 45 after, we can probably bail on the trade, which is kind of cool. It'll probably be a loss, but it'll be a small loss. Unless they whip it down within the next 4 minutes, then we're just going to lose 15 points. But if they can hold it here for a bit, at least, until that candle closes, we could be conservative and exit on a red close. Now, it doesn't mean it has to drop on a red close, right? But we're going to need a green close for it to continue higher. So you could just wait for the next green close, which might be significantly lower. But on the Renko charts, this one and TradingView, both of them say get in, right? The problem is there's resistance here, but I have evidence on this chart that potentially we have the start of a bullish trend that was technically started on this bar, right? So if this support is holding as a double bottom kind of thing, and we're breaking out and we're going to clean these stops up, it could happen right here. But it does need to close green, otherwise I will just bail on it. Not because I don't think it'll work, but I don't think it'll work right away if it can't close green. If it does close green, I'll let it go. It's like, I don't know what to do if it closes like doji, but I guess if it's red, it's technically not good. 2 minutes to close green. It is currently red just by like 2 ticks. The longer this takes to work, the less likely it's going to work, by the way. So the other thing you can do is just like put a timer on it and be like, if I have to hold this for longer than 2 minutes, it's probably not going to work. That's not always going to work, obviously. But the idea is if we think that this is some sort of a breakout, there should be like a rush to buy, right? Oh, my stop's got to be in the right place. Hold on. Let me make sure my stop's in the right place. Stop needs to be underneath this. It'll probably get hit. So it's got to be like 62.75 or lower. 1 minute. And then if they can bounce back up, I can actually exit the trade. If they close this red, I can just exit it. Hopefully with a bounce, not a stop. But they might just stop me out right now. And that would serve me right for being greedy because we're way too close to resistance. But if nothing else, I'll represent as a bad example because we did not have all the pieces of the puzzle, right? We did not have location. We did not have the Carries Willie confirmation. We only had...
Order canceled.
They got me. So let's see. It's still they still have 1 minute to save it, but I'm not gonna risk more than 15 points or whatever on it. Let's see if they save it in the last minute. Oh no, there it is, 145. So red close. So red close here probably means it's not ready unless we can get a green close now on the 15 minute. Because you can see up here, this pink needs to cross to have any chance of this being a trend. Now, it could just run right here, right? It could. And I might have just gotten skunked. But that is the risk you take if you buy that really early pullback. You risk missing it because you were too anxious to get in. But my read is that red candle might prevent us from getting this breakout to work at all. Unfortunately, I got stopped before I knew about it. So I guess I could have waited. What I could have done is I could have skipped the entry, waited for the 45 minute, and then once it's bearish, skip it completely. And if it would have been bullish, I guess in that case it would have gone already. I probably would have missed it. So I think either you miss it or you wait for confirmation most of the time. And then every once in a while you wait for confirmation, it closes green, and it pulls back and gives you an opportunity to get in. But my guess is this now goes back to support. If I had to guess. Technically, if we get a star up, well, no, it's bearish. Star up followed by the yellow square is probably bearish. That is usually a bear. So I'm not gonna fight that. If anything, it's a short. Plus, look how it's rejecting off the voodoo range level, or it's trying to anyway. We would need another red candle to confirm that. But see how this might be rejecting from the zero line? Right? So the indicators, and then wait, let me just see, what is the, how did the Renko bars handle this? No change. So they're still bullish. So this TradingView Renko chart says don't short, right? But remember, sometimes it's late. So there's not clear confirmation that it's bearish, but this system says if it was bullish, it probably should have gone right there. So therefore, the most aggressive move would just be to sell it and short it, right? The more conservative move would be, if it's bearish, where do I want to be short? Well, probably up here. Let's see what happens. If we can get under this guy and then trap back in, that's probably a pretty good long, I guess, if you're looking for a long. Because you do have dominant volume there. Yeah, you really can't short this, I don't think. Despite that looking bearish, I don't think we can really short it. We don't have any... You need more volume to the downside. That happened here. I don't see a great reason to short. It might just not be doing anything. It might just be sitting here. Or I totally got skunked by like 2 points and they're just going to run it now that they got me out of it, which would be funny. But you can see how easy it would be to slip into like a tilt mode if you get stopped out and then you don't take this entry and it goes. You can see how frustrating that could be. Let me just see what it gives me here. There's really not a lot of things I could do to get long here, I don't think. It's about to be another pink diamond. And even that's a little bit iffy. That's too bad. They're probably going to go without me. I just don't have a good way to get long. And the fact that it kind of looks bearish makes me wonder if they're actually going to squeeze it. Because I don't have a reason to be bearish, but they're putting a lot of aggression here. So they'd have to break out of this for it to be bullish now. I don't think I want to buy down here. The more I think about it, I really don't think I want to. They either have to break it out or it's gonna fail, right? We know that. And I'm pretty sure this was their best opportunity. But I don't have confirmation from the other charts to sell it. So I'm not going to do that. And now I don't have a long entry, so I can't do that either. Biggest complaint about systematic trading is you always risk missing the move because it doesn't set up. And that was a really risky buy. I probably shouldn't have taken it. It was not positioned in the right place on the channel. It also was a very, very light pullback, and it was at resistance. So there's a lot of reasons not to take that. Oh, and we did not have the Willy dot. We didn't have a dot here. So lots of reasons not to do that. I did it anyway. To demonstrate it as a bad example, I guess. But now, I wish there was a way to quickly get that stop back, and I think the way to do it would be to sell. And technically, star up, yellow square down is usually bearish. But until I get a bearish bar here, I really don't know if they're going to reject this. So it would be, rather than waiting for my confirmation, I would be aggressively guessing, right? But this system tells me short. So, but if I wanted to use the system we just talked about for 3 hours or whatever, I'd have to wait. And I'm kind of trying to demonstrate how that would work. But in either case, as you can see, you've got a risk of being too aggressive and getting stopped repeatedly, or being too conservative and just missing trades. So it's always a balancing act, and you always kind of have to be on alert for whether or not you want to be aggressive or not. You need to have some rules about that. And I don't have a lot of good reasons right now to be aggressive. So that's why this was probably not a very good idea to buy that. But I thought they might spike it though, because of the confirmation on the candlestick chart, but they didn't do it. And I honestly thought I might get a chance to get out at break even, But 11 minutes is actually a long time for one of these trades, so that was a lot to ask. And it literally only went up like 3 points and then dropped, so that's how it goes. You gotta be okay with taking a couple hits on the chin. It's embarrassing for sure, but it's just the way it goes. You're going to take losses. You're gonna make mistakes. You're gonna make bad judgments, and you're gonna do everything right and still take stops, no matter what your system is. So on the smaller time frame, they're trying to give purple bar with the triangle down, and so if they give a star here, you could technically say on that time frame that it's bullish. So we could try that, I guess. Let's see if they give it to us first. Let's see if we can recover it that way.
Order filled.
All right, we'll give that a try, and if that doesn't work, I'll be done. So this stop is smaller. It only has to go at like 60 or 59.50 rather than like normally it'd be like 54. So it's a much smaller stop trading on that time frame. Okay. Keep that in mind. So it's a small risk to try to get back into the trade and see if we can recover that in case they just swept me out. Now it might not work, right? This signal only works when we have dominant volume and the trend in our favor. But the way I'm looking at it, I see this as bullish, and we do have dominant volume, and we got a little bit of a pullback, and this one's at the right location. It's at the back of the channel, so this is a better buy than this one. But the problem is it's on the smaller time frame, which has more noise. The win rates are not as good on the smaller time frame. You get a lot more trades, a lot more opportunities, and a lot more stops, but they're smaller. That's the good news. Smaller stops though can mean a lot more trades, and that can sometimes lead to tilt. Like even though you're not losing a lot, it's pretty normal to take like 2 or 3 stops in a row on the 15 tick, even though you're doing everything right. Right? Whereas that's pretty rare on the 24 tick. It happens, but usually because like you're trying to catch the bottom or something. If you're doing everything you're supposed to be doing, you might take 1 or 2 in a row. You'll rarely take 3 in a row on the 24 tick. That's totally normal on the 15. So psychologically, if you can't hold your composure and lose 3 full stops in a row, like just don't trade the 15 tick. Let's see if I can take fuck. Come on back. I'm gonna see if I can get 8 points here on half of this. Feel me. Oh, are you serious? There it goes. Like it tapped me. Okay, canceled my bracket order. So now I've still got 1, and it filled my limit order. So I've still got 1. We're gonna see if we can push that just a little bit. Maybe make some of that back from the stop. But I wanted to take some profit just to be sure that I don't miss that opportunity. So we'll see what happens. My target's basically up here. I want to see them like push 11,000. Because there's really no reason to get long here unless you think there's a chance you might run, right? Like that's... So I'll put it a little under 11,000 just in case it gets stuck. I guess I could... I've got a voodoo range above it. I suppose I could go a little higher. It's probably going to go to like 1102. So let's go like 11. Is it really worth the extra point though? Like 1101. I don't need to get the top. Okay, 1101.75. Totally making back my stop and making me another $200. Beyond the stop I took, which would be pretty awesome, especially considering that I only risked like 9 points on that trade. So I already got the 1-to-1 on half, and I'll just kind of let the other one go. But if I see it, I figure put a limit order up here at 1101 or whatever, 1102, Because if they just like suddenly spike above 1100, they could immediately reject it. You might not really have a chance to hit the button. So, in my opinion, the only way to do it is to put that limit order up there. But then, like, if you see them struggle too much, you might just want to release it. But you never know. In my opinion, you always want a limit order somewhere you'd love to sell. It'll rarely get hit on those runners like that. Usually you're going to trail out, but oh man, when you get those big explosions, that's the best. And we know, we see it on the other charts. Like this can work, right? Again, here they're both above zero. They're not lined up right now, but see how they're both blue and green? Those can go. And there's actually another bar here that has more information that we don't know about. Then there's this, which got a red bar, but now it's getting a green bar that's breaking above it, and it looks like it's probably going to close higher. And look, if pink goes above the zero line, then they're all above the zero line, and that's a trend. So on the 15 tick, it's saying this breakout should hold. That's a much bigger picture than the algo is, right? Much bigger picture than this. But good to know that if we get a breakout, it could actually be a trend up. This has been resistance recently, so we have to somehow break that. That might require some kind of a pullback. I don't know. We'll see. I've also seen them just rip right through it. But it's well into Europe now, so they should have like some flows. It shouldn't be that long. This is actually a relatively good time to trade if you're not as tired as I am. I only took this trade in one account because I'm talking to you guys and distracted and tired and all that stuff. I'm not using the trade copy right now, so it's not a huge trade, but I did take it with full size because I want, like I said, I do want to. It's not just about being green, but it's just you want to finish what you started. If you have an idea and you see it and you take a stop that was valid but just a little bit aggressive. If you've got another opportunity, in my opinion, you sort of have to take it. Like, you took the aggressive trade. Why wouldn't you take the one that's more likely to work? There we go. All right, so there should be stops sitting up here above these apexes, but once they get them, they might reverse, right? So we have to be ready to sort of just... You don't have to hit... Like, you don't want to anxiously exit, but... If you see something on the footprint of the DOM that means that they're running out of steam, and you're like 3 points from your target or whatever, or 4 points from your target, like, don't be a dick, but also don't be like an anxious wreck and exit because someone sold. I usually suffer from the latter more than the former, where the moment I see some sort of aggression, I just fold. But that actually comes from trading these trailing drawdown apex accounts where like you don't want to give a lot back. But the thing is when you're down, that doesn't matter. It's only that trailing drawdown is related to whatever your highest watermark of your day is. So if you're down on the day, you can push that thing, right? Well, there we go. 95. Now I'm not down on the day anymore. So like I said, I will happily get paid at 11,002. But you could hold it longer if you want. I just think we probably struggle here. Oh, where's the close? The settled close is 11,000. Are you serious? Oh no. It's like 99.50 or something. It may not get me. That makes me want to exit. We're right under the settled close. But I think there's a chance that it just goes like spike and then pull back. But that spike could go like 20 points, right? Like that's the thing. You gotta realize that spike can be significant. Notice we have not put in another high or low, so technically I'm not supposed to trail my stop. A lot of people ask why I don't trail my stop to break even. It's because it's really normal for price to come back to break even, only to go higher. So I normally don't trail my stop. But at this point, I've already taken profits, right? And I'm just trying to get a runner paid. So if you're worried about giving back or whatever, you could trail your stop now, but I don't recommend putting it at break even. Find a better place for your stop than break even. Break even is like a psychological place to put your stop. Like find a technical place or mathematical place, right? Maybe one standard deviation. Maybe find like a Bollinger Band on a very small time frame, something like that, right? It doesn't have to be what everyone else uses, but something systematic. And maybe not your entry. Just an idea. It can be higher than your entry if you want. But yeah, it shouldn't be there just because it's your entry. That's all I'm saying. So on the higher time frame, you can see that they're trying for a big breakout here, right? They wanna bust all of this and get up here. That's what they want. They want like 1140. I don't know if they're gonna get that right away. Right? I mean I could like move my target up there and leave my stop and just hope that this low holds, but then I'm potentially giving back a lot, you know. So the way I see it, if they can just spike up here and fill me and then do the pullback, that'd be better. But I'll be honest, if I don't take profits and they pull back to my entry, I'll probably move my limit order higher. Because I'll assume that I missed that opportunity to exit early, and then I might as well just put my limit order at where my target is. Because then, what's the difference? It's either going to work or it isn't. It's either bullish and it's going to 1140, or it's not bullish and it's going back to support. So, might as well just leave my stop at the higher low or under the higher low, and put the limit order at 1140 and go to sleep. You know, like that's also acceptable for the runner. It's only one contract. We really don't want this to close. We don't want this to close negative. That's not what we want to see here. But it is big volume, so if they can push back, it can be retaken easily. But pink bar star, if it's not bullish, that will result in a pretty big retracement. So we're about to see in a minute if this is actually bullish or not. It did make another dominant wave, so that's good. It'd be great if they don't close this bearish. Then honestly, it's probably going higher. I think they're trying to turn this into a star going up. Oh, a divergent star would be good. A bullish bar would be good. That's all I'll say. Like, it does look bullish. I'm just not sure if they'll hold this or not. That's where I'm at. But there's no way for me to know that. That is not a thing I can know. That's a divergent bar going the wrong way if they close it bearish. That's not good. No, we don't want that. Any changes on our other charts? Let's double check our information here. Oh, okay. So this one has not gotten a red close on this time frame. That's good. What about our Renko chart? That one closes in. It's got a lot of time left. 6 minutes. This one, yeah, we did not get the entry signal here, but we're clearly above zero line. And are we climbing together? Yeah. No tag, right? Well, no drop. So if it falls, there's no reason to think it will bounce again. So in other words, I might as well have my stop here, because if it breaks that, it's probably not going to hold these. That's my read. Instead, it just needs to kind of build momentum up and keep going. I'm not sure how high. If I had to guess, 1140, maybe 1136. But it doesn't have to do it all at once. But the fact that we got this big pullback honestly makes me want to move my target higher, not lower. Because what I was hoping for is a spike right into 11 and then get a pullback. But if we struggle under 11 and then break, it's going to go higher than 11, right? That's the way to think about it. So, yeah, might as well push it a bit. So another reasonable place for an exit would be like 18. If you want to push it a little higher, which I guess I will. And that's, wait, what is this? Previous close. So there's this one, which is a previous close at 08. And then this one was a previous close at 25, let's say. So either one of those could act as resistance. Those orange lines can totally act as resistance. It could also just go to 40. Truth be told. It can do that. Oh, nice. Look, they retraced this high volume. That's great. If they can push through that, that should create a pretty good move. It's London, so we have to be a little bit cautious about being super, 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 like, one-directional. But you can get breakouts in London. They're usually just grindy. They're not immediate like they might be at the open of cash. It's like sort of like trading at lunchtime, where it can sort of grind in one direction and then suddenly drop. That's not that unusual. You can do it. Something to be aware of on the Renko chart on TradingView. Remember, we got these pink boxes on the Willie in this area here. And that's exactly where we are right now. Last time we met here, remember, they rejected it, right? So if it's bearish, that is your sell other than up here. And that one rejected here. So wherever these show up, if you're trading with the trend, like I said before, you can use that area as a rejection as long as you got some confirmation here, right? So like here, I'd wait for the pink to drop in probably. I don't want to do it when it's blue and green, but if they're dropping, then yeah, it's good at that level, right? Like right here. That's an okay place to sell. Now here, look, we're nowhere near the yellow line, right? And here, there's really no risk, it doesn't look like, of this just immediately dropping because they're both so far from the zero line. They might drop, but they probably won't go into the zero line. So my guess is if someone does try to sell here, they'll probably lose. right? So that's why I moved my target up a little bit. Is I think we might actually blow through 11,000 because that's a very logical place to sell. Yet it looks like a bad idea. Yeah, that star box works both ways. See that? You want to do it with the trend. Very important. You can also have a bar in between. Star, triangle down, box. That works too. As long as there's a triangle there, that works. Oh no, don't give that up. It does have to keep going. It's got to break that high. If you guys have questions while we're waiting for this trade to work out, let me know. I'm happy to talk about something else and get my mind off my trade unraveling here. But I don't exit because I think it's going to stop. Like, that's not a thing I do. If it looks like it might not work, the only thing I can do is I can add on a pullback so that I can get out earlier for the same amount. That's allowed. It's a little bit unconventional, but it's something I'm allowed to do as long as I'm close to my stop. But in this case, I'm not, so I can't really do that. Otherwise, I can analyze what it is about the trade that makes me want to ditch it, and I can research that and get the actual mathematical results over a back test to see if that's a rational fear or not. Because a lot of times, whatever it is that, at least for me, whatever it is that's telling me that I don't think it's going to work is actually just short-term information, like whatever I'm seeing on the DOM, and my idea might be on a much higher time frame. And that's exactly what this is. We found this trade on the 15-minute chart, right? And then on the larger Renko chart with these indicators, confirm that it's bullish. But really, other than the execution, the concept of the trade, remember, came from the fact that we had this big push at the close and then a pullback that held the low, making it likely that this is the beginning of a new trend. And then the indicators confirm that. So in reality, the biggest mistake you can make here is exiting too early or basically giving up on the trade. You're, in my opinion, I mean, if you're going to be a really good trader, you're going to need your good ideas where you actually get things right. You're going to need them to pay you, right? So it's important that when you're right, that you hold it. That also means that sometimes you're going to be right and you hold it and you don't hit your target and you don't get paid exactly what you thought you would, right? Like you had a chance to maybe make 2K, but you only made 800. As long as sometimes you make the 2K, that's probably okay, right? That might not always be the case, depending on if you're trading cash, that's usually the case. If you're trading with a prop firm with a trailing drawdown, you might need to change those rules to make sure that you're not giving away half your profits, because that's going to really hurt you. But a lot of times the market's small little undulations are actually there just to convince you to release the winning trade, just so you know. It's actually traders who miss their opportunity or knowingly are on the wrong side of the market, and they're adding to that wrong position just to try to get you to let go so that they can take your shares, or your contracts. It's sneaky, right? It's manipulative, but it's legal. It's just tactical. right? It's the same thing with like um, it's like having a it's like having a dog that barks really loud, right? Like as protection for your house, even though that dog might not actually be that vicious. If it's loud enough, it's going to convince at least some people to change their mind about like robbing the house or whatever you're worried about. Um, and that's enough to, in that case, like save you a lot of pain and suffering, right, or money. Well, from an institutional standpoint, if they can have a big barking dog and they don't have to pay very much for it, and it convinces people to like drop their contracts and then they can get paid by buying those contracts when you sell them at lower prices, and they have plenty of money to try to do that, they're going to do it, right? So just realize that if you have a read and you have a system that supports that read and actually says that when this setup happens, I'm more likely to get paid than I am to lose. It shouldn't matter what you see after you get into the trade. You're in the trade because when it works, it pays you more than when it doesn't. Or it works more often than it doesn't, even if it doesn't pay you more. One way or another, you either have a really strong win rate, and that's why you're taking the trade, or you have a good risk reward ratio. And if you release that trade just because you think it might not work, maybe like early, right? Like at 10,988 when it pulled back like that, if I would have dropped it, yeah, then like the risk that you take on that trade, it's not worth it anymore because your maximum favorable excursion now is like 10,988, except for like the 5% of the times that just go straight up. Maybe 2% of the time. Every other time, whenever it does any wiggling, you get 12 points, you know, and you never get 40 or 60. Whereas if you just stick with it, sometimes you're going to give back 20 points, right? It's going to go 20 points and it's going to reverse and it's going to stop you out and you'll be pissed. But the times that you hold it and it works for 60, 80 points, whatever you want to say, more than 20, are probably going to pay for those runners getting stopped out. All you need is like one of those a month, in my experience. One time in the month where it goes like over 50 points on a runner, and it's worth it. So as long as you occasionally experience that, I don't know this only from holding it. That just means we've got volatility. That's a good sign. I don't only know that from holding it. I also know that from watching the market after releasing trades that were working and seeing them hit my target and even go further, right? Like there's so many times when that happens and I'm not in the market. So, but I was, right? I had everything there and I let it go despite having a target higher. Now here, it hit 1104, so if I want to release it, I think now it's okay, right? Because that was my target, 11,004, right? But I see an opportunity for it to go even higher. So this is where it gets a little tricky when you don't have any more runners. One choice is to release it and buy micros to see if you can ride the micros a little higher. That's an okay choice. Otherwise, it's, you know, do or die, leave it alone, and see what you can make out of it and just keep trailing your stop, right? Now here, it might be tempting to put your stop under this. That's a little bit tight for me, but I don't think I need to leave my stop at the original place right now if they suddenly have like a flash crash. I don't think I need to leave it back there at 60 anymore. I think I can probably move it a little bit. My entry is at 70, right? So it's already a 30-point trade, which is good. So my entry is down here, right? And my stop was down here at 60. So at this point, I have to think about the fact that we might get some sort of a pullback. And if they really dunk on this guy, it's probably done. So if it gets down here at like 76, let's say, it's probably finished. Which would suck because that would give back everything but like 6 points. But that's like worst case scenario, flash crash, right? I lose my internet, whatever. Like worst case scenario, I make $6, 6 points, so $24. And that's a pretty good position to be in. Where absolute worst case scenario, I already banked 10, right? So there's that, and that way I make back that 16-point stop I took earlier, which is a good feeling. And because I took that stop earlier, I'm less inclined to take that profit early because I don't actually have an active trailing drawdown unless I'm at the high water mark of the day, which I'm not. Right? After taking that stop, I'm not at the high water mark of the day. So even with a trailing drawdown on this Apex account, it doesn't really make sense to protect my gains because those gains are just gains getting back to zero. So at this point, and it has nothing to do with psychology, it's just that the money is treated differently when it's at high water mark versus when it's not. That's just the way it works in that system. If you have a trailing drawdown, it's compared to wherever you were at the high water mark of the day. So if I don't push beyond that, then my max drawdown is the same. It's calculated based on that number. So there's no mathematical reason to think it's wrong to hold. And so now the only reason to really let go then would be if I felt like I had to psychologically protect myself from tilting. Well, after this trade, I'm getting some rest. So there's no risk about that at all. Plus, I've already taken 10 points, right? And that's the whole point of taking 10 points to begin with, is to protect yourself from tilt. Because when you do lose, it's a very small loss. And in this case, it'll actually be a win, right? So then the question becomes, at what point am I sure I am wrong? And how far do I actually want to push this, considering price action and my read and my targets and stuff? And then is there anything I could see on the chart that would change my mind? You want to have that all figured out before they happen, not while they're happening. It can be complicated or it can be simple. It can just be nothing can change my mind. I'm sticking with my process. That's okay. It can be I have these 3 things that if I see it, I'm willing to give them up because I've back tested it and I know that usually when that happens, I'm wrong. That's fine too, right? Whatever you want to do is cool. Just do that all the time. And then see how that goes. See how you feel about it. See how your results are over time, right? Not one trade, like over like a year. And see how that goes. And then if it stops working for you, then reanalyze it, right? See what it is that's causing the problem, try to mitigate the problem. The problem for most people is that they don't stick with what they're doing consistently, so they don't have any data on whether or not that works. And then they don't have any confidence because they don't have any data. It becomes like a vicious cycle. It's like once you've done this for a while and you start realizing that you just have to do the same thing over and over again, yeah, you just learn to do it. Even though it doesn't always work. You just do it anyway. So this all by itself with the volume is not very scary to me. We don't have a pink bar up here. And it took so much volume just to shift down one bar, is what that pink says. Is like an unusual amount of volume on there. Yet this isn't even pink. So, yeah, like bears are trying really hard to hold 11,000 is what that says. And if we can break over them, it's probably a big breakout. So, like, I don't love seeing aggressive sellers at the highs, but if I'm going to see them, that's what I want them to look like. I want them to have pink or purple diamonds, and I want them to follow bars that aren't pink. And I don't want to see triangles up or stars up here. Like this. I don't want this to be up here. That'd be bad. That'd be an example of something that might change my mind, right? If buyers get trapped up here, yeah, then maybe I just take the win, right? And even if that's for 15 points, that's probably a good choice. But until I start getting these guys up at the highs and then get behind them, it can just keep going. So, yeah, you just learn to leave it alone. And that's been like the hardest thing for me. It's like, you have a winning trade, you have a good idea, don't F with it. Let it do its thing, right? And I've done a lot of work on what needs to happen to make it possible for me to confidently hold those trades. It's still not to the point where it's like, I don't think it'll ever be like super comfortable. Like, it's always nerve-wracking having risk on, but it's definitely gotten to the point where I can, it's a smaller amount of anxiety that I can tolerate it without too much strife, right? I've built into the system not only like actions, but also like the process of like reminding myself, this is why I'm taking profit at 10 points. And this is what I have to see to, like, all the stuff I'm telling you, it's like I'm also telling myself, right? To stay with the process. Because if you want to make a lot of money at this game, you're gonna have to hold some winners. And you're gonna also give away some winners. You're gonna have some really good trades that come back on you. And that's what you realize after a while is that's better than never getting them in the first place. Right? That's the realization that I needed to have to change what I was doing is just try holding them for a while and see what happens. And suddenly my 10-point trades would occasionally become 20-point trades, and then I'd anxiously get out. And then like I'd try to hold them for 30 points, and sometimes they wouldn't work. But occasionally I was getting 30-point trades, and I realized, oh wow, yeah, sometimes I get traded back on, but all it needs to do is go 30 points one time, and that basically equals 3 of those where I got 10. And then some of those trades I'd get out at 30 points and they'd go 100 points. And I'm like, oh, maybe I should hold some longer runners. And yeah, and then the higher you push that, the more often they're gonna get taken. But if you just get a few of them to pay you big, you pay for a lot of those slips that you make early on. But I'm embarrassed to say how long it's taken me to learn to live with the risk of giving back. And it's funny because like it's not hard for me to take a stop, right? and I lose way more when the trade doesn't work and just straight out stops out. Like that's a much bigger loss, right, than what you give back in this kind of situation. Um, but it's harder to hold the trade because like one in the tree is, or what do they say? Like one in the hand is worth two in the bush, right? Like if you've mentally banked that money and you're looking at that P&L and you're like, yeah, I made that. Like it's gonna hurt then to give it up, right? So instead, if it's just, I mean, I don't really care if I look at the P&L, but if I look at the P&L and the result is I'm like identifying with that result, yet I'm still in the trade and it's not banked yet, like physically, but mentally I'm banking it, like it's probably time to evaluate how I'd feel if I lost that, or if I gave it back, I should say, and make sure that I'm going to be able to handle that decision, because sometimes psychologically it's just too hard to give that up. I am tired, but I am sticking with this. I do hope I get a little sleep. So what they may do here is they may come up and test 11,000 again and then try to reject it right here. That would suck. What I really want them to do is spike like 20 points. Just clean out all the stops. Like everyone just gives up and lets it go.
I missed something. Can you say it again?
Go home, Alexa, go home. Yep, they came up, they tapped 11,000, and now they're trying to reject it. See that? This would be one of those things where I would be like, I guess it's not going to work, and then release it. But the truth is like, even though it looks scary, I don't have any evidence that says that when it does that it's more likely to stop me out, right? It's just, I see a seller. But that's on such a micro, tiny little time frame compared to where I found this trade on the 15-minute chart, that like, that really shouldn't matter. It's like it's inconsequential when it comes to my trade. Like I can look back and say, do I have a setup to short or sell here? No, definitely not. Is my 15-minute chart still in sync? Yeah. In fact, the pink turned blue and crossed the midline, and this one is still above, and the green is still above, and this green one is even still above and maybe bouncing off. Everything there looks strong and bullish, right? Same with the bottom indicator, and then with this guy, this one is the most recent closed candle or bar, right? And look, everything is on the way up. We have not had a single down bar. There's nothing, there's no difference between this and this, right? Or this. They can put a lot of bars in there. Look at that. Now a hint would be which one is higher. So if we can get these aligned. Okay, the green, which is RSI, is higher than OBV, right? When green is higher than OBV, pullbacks tend to get bought after consolidation, unless it's the end of the move, in which case they get bought, but then they can make higher lows like this, and OBV gets left behind. Sorry, lower highs, and OBV gets left behind, and then they reject, right? So we want to really watch OBV, that shaded area with the blue line there, and make sure that that doesn't lag too deep, because if it does, it might signal that the consolidation is actually breaking down. But so far, we haven't even really seen any consolidation. It's just been, since we got in back here, it's been pretty much straight up, right? So that's certainly not something we should be worried about. Oh, there we go. Spiky, spiky. See, look at that. If I would have gotten rid of it at like 95, I'd be like, what? Not again, right? And it could literally go to 40. Like, that'd be a hell of a move. That's like 70 points, right? That's good. That's really good. Really, really good. I mean, even if I took it right now, it's a really good trade. And eventually here, you just kind of have to say, look, if they show some aggression, I've had enough. This is a great trade. I'm getting out. I'm happy, right? And we do have divergence here on the smaller time frame, and now we potentially have it here on the higher time frame too. So it doesn't mean it's going to reverse, but with all of these levels getting lower, it suggests we might need some rest, right? We're pushing up, 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 up without any consolidation, and it might be time to consolidate for a little bit. So it's not a horrible time just to release it if you don't want to get it back. And I'm kind of feeling tired, honestly, so if they do give this up and put an algo on it, I'll probably release the trade and be totally cool. But if they want to push one more time, I wanted 18 and we got really close. So I'd like to at least get that. There we go. But I don't think there's anything wrong with exiting here at 11:08. It's just 10 points earlier than my target. I don't think they're going to go to 11:40, but they could, right? They could go straight there. But I'm guessing they're going to need some consolidation, but I don't know that for sure. There's stops up there, right? If you look at this, look, this is probably where they're going to get stuck. But if this is a trend, if it's like up, consolidate, up, dude, they can go higher than that, right? They can go 60, 70. So just because there's a pivot here doesn't mean it has to hold. It doesn't. Oftentimes it doesn't, especially during trends. But if this isn't a trend and it's just like a test, and then we're going to come back into the range, like that, yeah, that's where it's going to struggle. So okay, so now I'm gonna move my stop up quite a bit because I don't really want it to come back. Like if it comes back under this, I need it to immediately reject. Basically, the star needs to not be given up. We can't put volume under that star, is the way I'm saying. Otherwise, they're going to trap it. So there's really no reason to hold underneath, like, I don't know, 86. So that banks 16 points now. Well, not banks, but if I trail out, it's up 16 points. If we spike and then we struggle up here, I will just exit. Because I want 1118. And I've got a sell order up here at the voodoo range level by 36. So if they just want to go and give me it, that's fine. But at this point, I don't expect that to happen. I'm just preparing for it, right? Psychologically and physically preparing for the fact that they could just be like pink bar, pink bar, pink bar, and just hit it. And you don't want to take 18 when there was literally no resistance all the way up to 40. You know, I'm okay taking 36 when there's no resistance of 40, but 18 is just a target. It's just like a. It's not even a. I've got no reason to think it's going to stop there. Right? It's just that pivot that we've seen act as resistance before, but it doesn't have to work again. Especially when you have these other levels above you. But like, so like this is where I'm thinking it'll probably end, right? That's where I'd like to see it test, is here. And then I'm thinking that this one probably won't get tested, but if they just decide to break right through this, I want to get paid for that. Because that happens. Okay, now I am at my high water mark, by the way. I just looked at my P&L. I wish I would have been trading more contracts, but that's fine. So now I am at the high water mark. So given that, I need to be careful not giving money back. So I'm going to go ahead and put my stop. I can't really give back 20 points. It really shouldn't get under this. Let's put it at 98. I could just exit. Oh, did I hit 18? Oh, they almost hit 18. There's nothing wrong with exiting in face of resistance, like near your target. Nothing wrong with that at all. But just realize that sometimes it's going to go further, right? Especially if you're high a day and you have a trailing drawdown. In my opinion, that's totally fine. And there's also divergence. That's not a good bar to see. We need to immediately beat that bar, or this is probably done. Because this suggests that this guy was built really fast, and then they got under him with lots of aggression. So this next bar really should be bullish. Otherwise, I'll probably just exit and be happy with 35 points. That's a good win. Yeah, I really do want to see if they can just hold 11,000, because that's probably what they're doing, is they're going to come back and test under 11,000 then run. But I'm getting pretty tired, and I don't want to make a error. So part of me just kind of wants to be done with it, because I think they are going to 11,000 after seeing that star with the diamond at the top like that. They're probably going to come back here and stop me out, trail me out, because my stop is so tight now. So it might, if it gets 18, I mean, honestly, any of these, I could probably just, any of these little spikes, it's not wrong just to exit at this point. It is right at the voodoo range level. See that? Right there. But again, it's really small time frame. But I'm just saying, I think they're probably going to try to take that 11,000 and they'll probably sweep it and then run it. So I guess I could switch to micros. I just don't want to give back too much from my high day. I didn't realize I had that much P&L. As long as if they immediately beat it, it's totally fine. And it is on the 15 tick, so there's noise there. Let's see. Where's all the volume? Is there any reason to be bearish? Okay, so really they have to get underneath 97 before having any opportunity to actually turn this around. So if I had micros and if I had no concern about trailing drawdowns, my stop would go like down here probably. Or if they got down there, any retest I'd get out. But I would not be surprised if that's what they're going to do. Is come down here and try to test that. See how they're rejecting right at all this volume here? The dotted line? Yeah. This is probably done for right now. That's too bad. That big figure is just getting in the way. Darn. Yeah, it does not look like they're going to save it, does it? Oh. It looks like they need to go a little lower. See how hard this is to break? And that sucks. There's just no liquidity here. Yeah. Okay, so it's clearly going to 11,000. And like I said, I don't think it's wrong to get rid of it there at all. But let's just see if they can hold this. And then rip right back through it. So pink bar, orange bar is not what you want to see if you're long. That's potentially a sign of aggression, with sellers giving up and then letting it go and then immediately coming back, shifting volume lower. But it took a lot of volume to do it though. So if they can immediately beat them, all's good. But this basically means if now I get to 94, it's pretty much over. So I don't even think I'll hold that long. If they break underneath this 98, I'll get out. And that's still a respectable 28 points. Putting me green on the day. And back right about where I thought I would initially target. So, not bad. But, okay, Cat. I know, it's time for bed. I'm coming. Pretty sure they're going to take me here. Would be surprised if they don't take it. The truth is, though, if they set up bullish again, you could probably get back in. Like, if they got under this and then swept back up, you could probably get long again. Like, it is still bullish. I just think they're going to try to re-auction some of that move. That's the problem. It was just very impulsive. But the higher time frame does not look bearish. So, if it wasn't for the trailing drawdown, I'd love to hold longer. But I'm pretty sure they're going to sweep 11,000. In which case, I probably could have taken 1108. Part of me just feels like you never know. Like, you do have to let it breathe, but there is a certain point where it's like diminishing returns, you know? Yeah, see, they're trying hard to hold it, and they're not getting a lift. So that's a good example of where it's like, it's a small time frame, but if they fail to lift it now, it just needs some time, you know? It's gonna rest. So I think it's
Order
okay to let it go.
canceled.
All right. Ooh, good timing. All right, so I let it go because it wasn't holding 11,000, and I figure it's gonna sweep. Now, like I said, if it comes down here and it gets under this and then it jumps right back up again, I don't think it's wrong to re-enter. It's a little bit early, but I don't think it's wrong. But the truth is I'm happy that I made back the stop and I did everything more or less right. Yes, I didn't exit at the top, right? But and it would be frustrating if it just goes. But you got to put your stop somewhere. You know, I didn't want to put it at 11,000, but I figured if they tried to test underneath it and then they came back up and tested it and they rejected it, it was probably done. But maybe I needed to give them 5 more points, maybe. But most likely, seeing what I just saw, I'd be exiting on a jump here. Right, like if they jump up to like 1103 right here, I'd probably get out. Right, so I mean, you could do it that way if you want, or getting out at 1108 knowing that you were going to exit 11,000 or so probably is okay too. But my guess is they need to consolidate here a little bit. You can see on the Renko chart on here, we're going to start printing a red bar if we can't get any higher. But these are nowhere near the zero line. So really, there's not a lot of risk of this going all the way back to my initial stop. The only reason that I'm nervous about it is that I have that trailing drawdown. Otherwise, it'd be like, just leave it. Oh, but it is okay to put micros on. That would be an okay solution too. So here we're still way above. Everything's going up. This might have had a tag right there. But low volume pullback. Closes in 5 minutes. It did get right up to the resistance. It's probably still going higher. Okay. Okay. Cat says we need to go to bed. He keeps stepping on my keyboard. Pretty sure on purpose. Let's see what they do here, and then I'm going to bed. I just want to see if they go spike, because, yeah, then I'll hate myself for a little while. But I don't think they will. I think they're going to test above 11,000 and then reject it and rest, and then we'll be done. That is my read, and it makes sense seeing that we have pink bar, orange bar.
The last couple of hours, we learned
Oh,
that the architect
what?
Did
you do that, Cat? Alexa, go home. Jeez. Using his tail or something to mess with my electronics. Oh. Oh. Volume shift up at the bottom of the channel. Tempting. I don't think it's a good idea to buy it, personally. I think they're testing above 1103, but look at the divergence. See the divergence here? That was another reason just to exit up here. When I saw that, right? I noticed it like right here. So I could have taken 11,008. I wish I would have gotten 18. It was so close. I would have taken that. But that's usually how it goes. It's like up, 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 up until it shows some aggression, and then it's like, how low do you want to take it? And then as soon as you let it go, it's gonna come back up, but then reject. I wouldn't sell it. I wouldn't short it, I mean. But if I had to guess, if we do break that stop, it's going to be divergent, high. It's going to be divergent, and it's going to pretty quickly reject. It's also totally possible we just don't break the high, and they just reject right here. Or they just run. And I look like an idiot. It's definitely not bearish. I just don't know how much momentum they actually have left. If they're going to push, it has to happen relatively fast. See how it's rejecting from the voodoo range level now from below? That's caution. If I was still long, I'd be like, yeah, I think I'm done with this. I'm not saying that's right, but that would be my read. Would be that doesn't usually happen when it's really bullish. But has not closed the candle yet. No closed bar under the voodoo range level, so maybe not. Well, I'll be damned. Look at that. There it is. 1108. So back up to where all the volume was. See that that dotted line's where all the volume was? So they come back up there, they test that. That's a logical place to try to fight it. Otherwise, those stops are getting swept. And I just didn't see it as good enough as a big enough pullback to really feel confident that that's the consolidation and it's just going to fly from here. But maybe that's what's happening. Just needed a very, very brief check of 11,000. Went 3 points below, whereas I had my stop 2 points below, and then it runs. And if that happens, I literally got stopped up by 1 point. 4 ticks. We shall see. This is where I'd expect them to stand up to it if they're going to. If they don't, target's getting hit. And without me. Again. But I think 1108 is a totally respectable place to exit. By the way. I think it's totally fine just to get out here. And had I bought that green here on this tiny little time frame, I'd be exiting. Honestly. I'd be like, okay, I got my little scalp. I don't think this has a lot of momentum left. Good enough for me. That's just me. Might be totally wrong. Okay, now they put a big aggressive bar up here, so the star up here. If they get under here, it's clearly bearish. So you can buy it if you really want to, but I wouldn't. But that's a defined risk. That's the good news. Oh, they're gonna take that stop. Shit. 1 point. 1 NQ point. And here comes 1118. Man, missed it by this much. Now watch it go to 1140 in a moment. They just needed one more tiny little dip. 1 point lower than I wanted to risk. It was somewhat arbitrary, but usually this channel works pretty well to hold it, and it just went 1 point under it. But yeah, I think it's totally fine to give up on it here. I really do. I don't think it's going to go much higher than 1118. I think as soon as sellers come into it, it's going to rest. And then probably go higher. Maybe not. If this green stays up here, maybe it doesn't. This might keep going. The candle chart says higher. My reading price action says no way. This needs rest, but the chart says higher. I think higher after rest, personally. I think this turns into a consolidation zone. They're going to take the high though. Look at that. Like don't sell here. That's all I can say. Well, if you're going to sell here, don't put your stop at 11.18. I mean, I guess you can. It's a pretty small stop, but chances that works are unlikely. Very low. We haven't seen any capitulation on the sells from sellers yet. So I do think the trend, the push has more. I just think it needs some rest, and I need some rest. So probably should have just exited at 11.10. Thought I might be able to hold a little further, but truth be told, if I was going to get rid of it at 11.18 on the spike here, I should have gotten rid of it at 11.10. Only way I hold that pullback should be if I would then, if it worked, hold it for like 11.40, and I'm just too tired to do that. So I think that was a little bit of a mistake. As soon as I saw that my P&L was higher, just like I said before, similarly to like how you psychologically bank it, recognizing that, oh wow, I'm at a high watermark, I don't want to give back. That's probably just the time just to exit. Just click sell, you know, get out of it. Yeah. Because you know eventually it's going to consolidate, and then it'll probably set up again, you know, or sell it by 2 micros and just let it roll, see what happens, and put your stop somewhere reasonable, not under 11,000. There it goes. All right, well, they're going to get 11.18. Let's see how much higher they go, and then I'm going to bed. So I guess I could have waited for this bar to close red, this one, and when it didn't, it had a strong likelihood to get that 11.18. Okay, there's 11.18 at the high. Did I call the high? Wow. Well, that happens. Yeah, see, I'd be out of it here. I'd be like, it hit my target, I'm happy, I'm out, you know? And so knowing that, I probably should have been out earlier because I was being a dick for a few ticks. It was like, I gave up like 18 points to try to make 8 points more. Like, just to like prove a point, you know? And then the result of that is they got me by 1 point and then ran to my target. So, lesson learned, be a little bit more dynamic and don't be a dick for a tick, but still stick with your program. At least I didn't, you know, let it go the first time it went to 98, and I did hold it. It just didn't hit my target, and I got stopped because of the trailing drawdown. I don't want to take big hits there, but I think next time I notice unexpectedly that I've hit the high watermark, I should just exit the trade. Because if that's what's going to bother me, then just bank that physically, and maybe like lower size or yeah, take a break, whatever. Like, reevaluate whether or not you want to keep trading with those gains under your belt. Is probably the answer. Okay. Well, hopefully this would have helpful, you guys. I need some sleep. I'm gonna try to come back and trade in a couple hours. So, yeah. Okay. Cool. So I'm headed to bed. Hopefully this was helpful for you guys, and I will see